So, welcome again. I hope you have a fantastic Sunday. Today, I want us to go through one of the topics that have been requested. I'm Peter Chega. I work with AIB Access Africa. I started in 2007. That's when I joined AIB Access, 2007, and I've been there up to the current role that I hold. I'm happy to bring these trainings for free to you. Yeah, I'm happy to bring all these trainings for free to you so that you understand the market. And when you're investing, you invest in good stocks that give you returns. If you have any question, put on the chat. As we continue, keep on answering. I would like to know whether you can hear me. Just show me. If you can hear me, you can just say hi. Okay. All right, I think we can go straight into the presentation. Allow me to switch off the camera because of latency. Then we can drop cards for those who have lifted. Thank you, thank you. So today is NSC Share Trading Day 17. We have been doing these live trainings, free trainings. I think this is the 17th in terms of NSC. And all those videos are on my YouTube channel. So this one I will add tonight so that those who didn't make to come, they can have next week to go through. And on that channel, there is still more free materials. I've not put any video behind the wall because I would like all of you to have access to it and even your friends. So again, for those who are joining, we have not started. We are just starting. If you have any question, put on the chat. So today I want us to go through building a smart investment portfolio. We have been training how to buy shares, how to invest, but how then do you build your own portfolio? Remember, when you're investing, you're buying shares. Shares are part of portfolio. If you're buying bonds, they also add up into your portfolio. If you're investing in money market fund, the same thing. If you're investing in commodities like gold, silver, the same thing. They make up your portfolio. Also, if let's say you're investing even in international markets, you need to diversify your investment so that at least you are cautioned. When market is down, you have maybe international markets or other products that give you some income. You don't want to put everything into one basket. So my name's again Peter Chega. My WhatsApp number 0723 384 775 for those who may want to reach out. I'm always available, and as I said, all these trainings are free. My groups, my Wealth Guide KE, is free to everyone. And recently I opened now the chat group. Once it is full, I'll create another one. At least we continue engaging each other. We are learning from each other. So let's start. So a strong portfolio is not just about owning many stocks. We have seen investors who come to NSC and you want to buy any stock that is trading. You want to go to international market, you want to buy anything that comes out of your way. Now, while that may not affect your portfolio, it may affect your gains. Remember, there are stocks which don't move in prices. And for those who are new in stock market, when you buy shares, you're actually becoming a shareholder. Let's say you buy shares from Safaricom. You are becoming a part owner of Safaricom. If you buy shares from Equity Bank, you're actually becoming a part owner together with Dr. Mwangi and the rest of his team, Dr. Munge. You also become a part owner of that company. The only difference is the percentage ownership. For us, we are treated as minority shareholders. because we own a very small portion of the company. I'll show you when we go to Kenya Pipeline IPO and we try and analyze the results. Ian, you can't hear me? Maybe what you can do, try to check when you're casting, there should be an option to cast both the picture and also the sound. Just check whether it is there. So when you buy shares, you're becoming a part owner of that company. So when company does well, when the other shareholders are getting portion of the profit in form of dividend, you also get it. If a company grows well and there is positive sentiment in the market, price goes up, you gain. But again, that I usually call it paper profit because you have not sold. For price movement, you only realize when you sell. So that's just a brief introduction to shares. For those who may be new, you're buying ownership of a company, you become a shareholder. When they pay dividend, you are entitled. When prices go up, you can decide to sell. It is a decision to make. Do you still continue taking dividend or do you want to sell? And remember, when you sell, you may never come back to the same stock at the current prices. So a portfolio structure. So if you're owning stocks, you may want to mix right assets that work for you and that you can easily invest in. So let's see a good portfolio structure. First of all, it contains dividend stocks. We'll see sample dividend stocks. These are stable companies that pay regular dividends. It is a regular income that comes to you without selling. Remember what I've said, you buy shares, you become a shareholder. You're actually buying out somebody, unless it is through IPO where you're giving money directly to the company. If you're buying from NSE, you are buying out an existing shareholder at a profit or at a loss. If they're existing at a profit, you may also want to make profit. So one way is where you hold shares, you don't sell, but you receive dividends. So they make profits, they pay out those dividends, they are sent to you directly. When you open CDSE account, you usually give dividend disposal mode unless you change in between. So that dividend is sent there in form of cash. There are those that give bonuses, like what happened with Williamson T. Kapchorwa. They give a cash dividend, yes, money sent to shareholders. Then on top of that, they give additional free shares without shareholders incurring any cost. Then we have a good portfolio should also contain growth stocks. Growth stocks in NSE, they're usually confused with speculative stocks. Growth stocks are companies that you expect their value to increase over time. That is, price to move over time. Here you are looking at companies that are undervalued. And undervalued here does not mean you are comparing the value of the company at NSE against its share value in the books. You are comparing against the peers. So you are comparing against the peers. Like if it is Equity Bank, you are comparing that price with KCB. Then you realize Equity Bank, maybe the prices are undervalued. Because if you try to compare the market value against the book value, all shares will always be undervalued. Why? In the book value, there are shares that are not listed at NSE. Remember at NSE, we will see in the KPC IPO results, there are shares that are held by institutions within the government. Those ones, they don't trade at NSE at all. Like now for KPC IPO, you already know what government got. There is also Rwanda and Uganda through their oil companies. Those shares will never trade at NSE. The shares that trade at NSE are the ones that are publicly held by me and you. So you may want to hold on to companies that you expect to gain value. That is, you buy low, sell high. That's what growth stocks are. So dividend stocks are the ones that pay you cash or extra shares for free. Growth stocks are those that you buy low and you are able to sell high. And here you have to differentiate with penny stocks. Penny stocks is any stock trading below 10 shillings and that doesn't have enough liquidity, and also where the company is struggling to operate. Some of these may give dividend, but that dividend is very small. Now, an example of growth stock is Safaricom, Absa, Co-op, Equity, KCB. Dividend stocks, we have BAT, we have Stanbic, Stanchart, we have Kengen. Companies that give good dividend. Then we have defensive assets. These are assets that trade in NSE or even in global markets that caution you when market is down. These are assets that don't follow any price prescription. That is, they don't follow results announcement, what is happening in the market. It's all about demand and supply. This includes Absa Gold and ETFs. In NSE, we only have two ETFs, Absa Gold and SMWF. If you look at last week, gold itself have been trading above 6,000. While the market went down, and we'll see why it went down, Monday, Tuesday, Wednesday, gold was still doing well. SMWF was still doing well. And I would explain why. Stocks in NSE, they are limited by 10% rule, and orders are also controlled by the type of the investor who is placing that order in the brokerage. Some of these defensive assets are not held by institutional investors. So it is me and you who is selling and buying. Anything that affects me as a buyer will push the price up. Anything that affects me as a seller have a probability of even pushing that price down. Then you also need to have some of your investment in cash. And cash here, it could be real cash, it could be in assets that you can easily liquidate, like money market fund, where you can easily get your money back, where you are not actually trading. So a good portfolio, first of all, dividend stocks. Have growth stocks that give you value such that you can buy low, sell high. Then have a defensive asset such that when market is affected, you still have an asset that you can sell easily and make money. Then always keep some in cash for why opportunities come. Like last week, it was a very good opportunity. Government created a good opportunity for all of us when market went down. But what do? We usually panic. Instead of buying when the market have gone down, we want to buy when markets have gone up. So basically, always have cash ready to transact. It can be with a broker. You can deposit it with a broker. Leave a small portion that you can use to easily get cheap stocks when price fluctuates downward. So let's take an example of most of us what we usually do. You find in most portfolios 50% is dividend stocks. Then you may find 40% is growth stocks. But remember, some of these growth stocks also give dividend. Only that some of these dividends are small. And there are those who have gold, Absa Gold, and there are those who have the SMWF ETF. Just briefly to go through dividend stocks. As we have said, companies that give you free cash without you selling. But remember, there are those that give high dividends and there are those that give small dividend. Why is that the case? You find most of the companies, they have already innovated. They no longer have expansion plans. And much of their profit they have already utilized to bring in new products. What do they do when they get higher profits? They share much of that with you, 70% and above. shared out. And you find these stocks hardly move in price. And if they move, it could be one trade or two trades. And you find these are stocks with high prices. Then growth stocks, you find they give, yes, low dividends, but much of their profits, they go into expansion. What does that mean? That creates interest in the market, pushing the prices up. Remember, prices can only move if demand is affected or supply. One have to be affected. Good sentiment, people want to buy, push prices up. Panic in the market, people want to sell, nobody want to buy, price goes down. But remember, there is also element of government in the market. While we may say there is no control in the prices, you'll be shocked in NSE. In NSE, there could be that element, not directly, but indirectly. So let's see the difference between dividend and growth stocks. So dividend stocks, they provide you with regular income. You are buying shares that are giving you income without you selling. So let's say, every time they announce results, because that's when dividends are announced, they pay you out a dividend. A good example, BAT. It's already come dividend. They have given you a dividend of 60 Kenya shillings per share. So you only need to multiply that with the total number of shares you have, less withholding tax. That is the amount you receive free without selling your shares. Remember, the shares are still in the market. Prices are moving, possibly moving up past your average cost, meaning while you are still receiving this regular income in form of dividend, they are also appreciating in price, creating capital gains. You find these are stocks that are more stable. When market collapses, you find the prices don't drop that much. And if they drop, then the company have to be affected in a way that even investors, they feel they need to get out. You want to sell more. And they also allow long-term compounding. What does that mean? I have done a video on how to reinvest your dividend and also to recycle the dividend. Recycling is where you are buying the same stock with the same dividend. Like BAT pays you, instead of buying another stock, you are returning that back to BAT to buy more. Remember, it is free money. That is recycling. Then there is where you buy now a different stock. Let's say BAT gives you dividend, then Equity announces dividend after the payment day of BAT. So once you receive BAT money, you go and invest in Equity Bank. It is free money you have used to buy another dividend. So that if continually done, you find you are compounding your investment and also your returns. At some point, you realize your portfolio have even outgrown what you had projected. So that is using dividend stocks. So you receive free money, buy another dividend stock, or you buy a growth stocks where when price goes up, you also sell. Growth stock on the other side, they allow for capital appreciation. Remember, when you're investing, you're putting money, you have to deposit money in a broker. And for those who are new, the way it works, you open a CDSE account with a broker. Broker will open that account at CDSE. CDSE will submit that account at NSE. Now, you as the client, once you receive that CDSE number, you deposit money with the broker. That is capital you are putting in. You initiate a trade. That is, you want to buy shares. There is somebody else who want to sell. If you match the prices, share will move from the person who have sold to you. Then money moves from you to the person who have sold. How does it work? Broker submits the order to NSE. Both buy and sell. They match. NSE will submit a signal to CDSE. Move the shares from the person who have sold to the person who have bought. At the same time, NSE will send a signal to the broker. Move money from the person who have bought, pay CDSE to pay the person who have sold. So remember, that is how trading works. So for capital appreciation, it means this money you are putting in to buy shares, you need at one point to sell at a higher price, make money. Remember what I said when we started. When you're buying shares at NSE, you're actually buying out somebody. Either at a profit, they have made profit. So you are buying out their investment plus their profit. Or they have lost value in their money. Maybe they are in loss. They want their money quickly. So you are buying their investment plus their loss. That is lower amount. What does that mean? You need also to make money out of your investment. That is what is called capital appreciation, where you buy shares and sell at a higher price. But as we have said before, we are in NSE to create long-term wealth, unless you are a trader. And what does that mean? We go back to here, where you have a portfolio structure. You need to have a stocks that give you dividend. Those ones don't sell. Maintain them unless price goes way above the current price. I will show you with a screenshot of one site I usually use. You see BAT as an example, where at one point you'd have needed to sell that stock, even if it is giving you very good dividend. Then you also have this growth stock that you buy low, sell high. Remember, it is you to make the decision. Do I take the dividend, which is small, or do I sell and wait for the price to fluctuate downwards and buy back? But now, growth stocks carry the higher risk because remember, you are buying and selling. Here, you are trading. At the point of submitting order, you may make a mistake and put a lower price. You end up selling at a loss. Maybe the market that time is going down. Or when you sell, you are not able to get back at a lower price. The share continues to go up. But then it has potentially high returns. I want to remind you on what happened in 2024, 2025. Market went down. Most of the stocks, they went down. Then 2025, 2026, we have seen the market go up to a tune of 200%. I don't think there is any investment asset out there that can give you that return, 200%. The highest you can get, I think it is a special fund. I don't want to market anyone here. Then they are giving around 46%. But remember, the higher the returns, the higher the risks. So for growth stocks, they carry higher risks but higher returns. So in form of dividend stocks, you may find mature companies like BAT, those which have been in the market for the longest and they have outgrown. No? EABL, Stanbic, Stanchart. In terms of growth stocks, then you have the companies that keep on expanding either regionally or technology-wise. We have Safaricom, a very good example. Equity Bank, both technology and expansion in terms of regional. KCB, the same thing. ABSA, the same thing. Coop, the same thing. What about Kengen? Kengen does not expand and does not grow in technology. That's why it fits under dividend stocks. The price is low, dividend is also within. If you look at its dividend yield, is actually the second highest dividend yield from BAT. That's why I usually classify it under dividends. Though now with the changes that are coming in the board level, I think they want to split the board into two. You may see now a completely different Kengen. So for you to have a balanced portfolio, then you need to mix the two, dividend, growth stocks, and also have a defensive asset, gold. In the previous training, I think I told you there is a way you can buy gold at a lower price and sell at a high price. So target to buy at low price, then sell at a higher price. That's the only thing you need to do with the gold. Don't keep it in your portfolio forever. Why? Price may go up. Then by the time you are thinking of selling, prices have gone down. A minute. So I want to show you Let me open that site. We see the performance of BAT. Let me share this. Stop sharing. Let me share that. It's called stockanalysis.com. It's a free website. You don't need to sign up. You can always get these details. But if you can sign up, it's a free account. You don't need to go for pro account. Then, let me see whether there are questions on the chat. Okay, I think enable share. Oh, okay, I get you. It's a question I've seen here. I think it's because I've disabled controls from the meeting. It's because I don't have a moderator. That's why, but I understand the issue. So now I'm on stockanalysis.com. Let me share this link. It's a very good site, which you can use even to manage your portfolio. It's called stockanalysis.com. So what you do, you come and search maybe Safaricom, Escom. You get the name, you click on it. When you get the page for Safaricom, click on Kenya. It gives you the list of NSE stocks. It may come under overview with the pricing. Now I want us to take BAT. So I click on BAT name. Then let's see whether it will load the chart. Let me just refresh. Hopefully NSE data is still available. Okay. Just refresh again. Let me stop sharing. We first load. Well, that graph gives you the performance of stock over the time. Let me just reload again. CVT road. Looks like they are not connected to NSE. Let's just proceed. But if it loads the data, I'll show you. If it loads the data, I will just show you that graph. But if you look at the graph at some point in 2014, the share had gone to around 1,000. That is BAT. Right now it's 500. It had gone to 1,000, then dropped. Those people who took profit, they no longer seeing paper profit because they sold at a high price. The same thing. If right now you own BAT, it goes to a price. Right now you can buy it around 500, and it goes to 1,000 or even 800, 900. There's nothing that stops you from selling that stock. Just sell, wait for the prices to come down. It doesn't take too long. When stocks go to their highest, it only takes just one trigger for the price to drop. And when it drops, buy again. So even if you're investing long term, when the share price is way too high, just sell. It's called portfolio balancing. Just sell it off. Either buy another stock as wait for the price to come down, or wait for that stock price to fluctuate downwards. So these are some of the dividend stocks that are in NSE. One of them is BAT we have seen. Right now it gave a dividend of 60 shillings, so around it has gone up. Then there is Stanchart, Stanbic. There is Jubilee Holding. Hopefully they are not affected by what is happening, but most of the insurance companies, I think most of us, we don't check on the policies. Maybe natural calamities are not covered. And if they are covered, then they provision for that. But remember, these companies, they are not only dealing with insurance, they have other products. Then we have Kapchorwa Tea. We have BOC, EABR, Kakuzi. Now, Kapchorwa and Williamson, they may be affected because of what is happening in Iran. Iran is one of tea exporters for Kenya, and I think even travel to Dubai have been limited. So we may expect some instability in terms of their dividend this year. Then you have DTB Kenya, that is a bank. NCBA, we all know what happened. It was bought by Nedbank. And also Standard Bank also bought some shares in Nedbank. And once that is approved by the regulator, I think the whole process will become clear. Hopefully they continue giving dividend and paying Kenya shillings. I think there is a rumor that dividend will be paid in dollars. Let's wait and see. Mostly what happens, if a company is bought by an international company, then the registrar is no longer a Kenyan registrar, then you be treated as foreigners. But with that, there are modalities to make sure the market is not affected. So let's wait for official communication from NSE. Then we have removed Baburi. Baburi was removed from NSE. Of course, we have Williamson Tea, Equity Bank, KCB. Those ones, they usually give 4 shillings. Hopefully this year, because they'll be announcing this month their results. You can be on lookout for their dividend. Then we have IMH, that's INM, and Crown Paint. These are stocks that you'd want to hold forever, unless price is way justified for you to sell. We come to stocks that you can trade. These are stocks that give you lower dividends. When price goes up for these stocks, nothing stops you from selling. You sell, you don't need to wait for the dividend, then you buy back. But remember, when you sell, you may no longer get that stock at the same price. That is a disclaimer in the market. When you sell, you may never get that stock back in the same price you initially bought it at. So for those who are joining right now, we are going through how to build a portfolio, a smart portfolio that can help you in shares. So we are running NSE share trading and also a bit of introduction to global markets, so that those who may be interested in global markets now, in the next training, I will have a separate training for international stocks. So we have seen the stocks that you want to hold long term. They are here, the ones that give dividends. Don't worry, I will share this presentation together with the video. Then we have the stocks that you may want to play with the prices. These ones. These ones, it's all about comparing the dividend against capital gains. Why? Some of these stocks, the prices are a bit low. Let me take a good example, though I will come to it. Safaricom. I think in the previous training, I've always told you this price for Safaricom is controlled. And I think some of the investors didn't believe that. But then, let's ask ourselves the question. This share have been trading below 30. It gave dividend. For the whole duration of dividend, it would go up to 32, then drop. 32, drop. Then closer to book closure, it went up to around 33.95. It didn't hit 34 at all. Yet there were orders even above 34, 35, 36 to sell. The main question is why? Why is this price capped at 34? Does it mean they are 34? Because you can see the orders, they are not even above 10,000. It is orders which can be cleared quickly. But the price never went above that price. We will come to that slide. I would like you to understand this market from a different perspective. Where there is no direct control, remember, government invests through various arms. They only need to place a single order that can never clear. NSSF, how much do we contribute? Where do they give us the returns that they give as interest? those returns are very low. It tells you where they invest in. If they were to invest in international markets, they'd be giving what other funds, other pension schemes are giving, what other money market funds and special funds are giving. But the raw returns tells you most of these investments goes to NSE and government boards. In NSE then, what does that mean? Government have the upper hand. If they are doing anything that may affect the market, they can use an SSF to control the prices. It's only a huge order that will be put either to buy or sell. You will never clear that order. Price will never move. You have seen a scenario where in the market, an order is placed. It's only that market is closed today. I would have shown you that screen on market depth, where you have a single order of 5,000 that never clears. But if you look at the screen, you can see there are people buying and selling, but that order never clears, and the price is at that level. That tells you there is a huge order behind that you can't see in full. Those orders are called disclosed quantity orders. I'll come to that. As I said, I've been in the market since 2004, interacting with all the systems. So whatever you run here, always utilize it out there, because you may be chasing prices, but the prices you are chasing will never move. A good example, Kengen. Price always below 9. If it fluctuates, it goes to around 12. It never goes above that. Why? Again, these are questions you want to ask yourself when you're investing to know whether, if you're a trader, do you want to invest in Kengen? Your money will be held forever, unless you're targeting dividend. So this is where analyzing a company, understand who owns the shares, why price never moves, helps you determine, am I buying this stock to chase the prices, get my gains, or am I buying these stocks to get dividend? Now, there are some stocks that give lower dividends, like TPSC, then there is Centum, NSE, Kenyari, CIC. They are good stocks to have in your portfolio, especially Kenyari and CIC, for price movement and not dividend. These stocks, the price is way low. They are the pennies that pay dividend, penny stocks that give dividend. Instead of chasing uchumi, which you'll never be able to sell, remember uchumi, when you buy, maybe the time you are buying, that's when all the bid side, the blue side, have the orders. The red side for us doesn't. When you want to sell, now you all move to the other side, you block. Nobody wants to buy at the current prices. Instead of chasing those stocks, it's better you buy either of these two. Why? When you buy and you're not able to sell, remember this stock is also giving you dividend. At one point, that price will stabilize. You can even get out. Remember, you also got some dividend. And some of these stocks, in the next training, I'll come with a list of stocks that were added in MSCI Frontier Market Index, which means what? Any stock that is added in that index, for foreigners have to buy, have to invest in it. And that's why you have seen CIC moving from a price of around 3 to 5. Because foreigners, when they come in, they are buying, they create demand, pushing the prices up. For Kenya, it is different. The price rally you have seen on the Thursday and Friday, it is different. It's because there was an announcement by government. They want to restructure the board. And us, how we interpret that information is that now Kenyari will be profitable. But what does Kenyari do? It is the insurer of the insurance companies. Meaning, if the insurance sector is affected, Kenyari will also be affected. Where it is a good stock, yes, you can buy right now if you are able to buy. But have in mind that you are not chasing the prices, you are chasing the dividend. But when prices go way high and you are able to exit, wait for the prices to drop. I gave another example in the previous training of ABSA. It was just added the other day. And price was supposed to go way high. But what happened? we are coming to that slide, so that you know when to target the market at the right time. So then you have invested in these stocks. I'll show you how to buy them. That is, you have dividend stocks, growth stocks, and you also have Absa Gold. I won't tell you to go to SMWF. The price doesn't fluctuate. Remember, there are risks. Like just what happened on Monday. The market just turned red. For those who are there, let me show you on the online portal what I mean by market turning red. I'm just logging into AIB Access online portal, but you're free to use any broker. I'm just connecting my VPN. Then I just show you that screen. Just connecting so that you see the effects of the prices. When market goes down, what happens? And it only requires the market to panic. And I will explain what happened on Monday, because you had a very good opportunity of getting into some of stocks at a very cheap prices. Hopefully we get another KPC IPO, which will cause the market to crash. It has nothing to do with Iran and Iran and US Israel war. It has nothing to do with it. So I'm just connecting. Let me log into the online portal for AIB Access, but you're free to use any broker. Stop sharing. I'm just connecting. I log in. Let me put my username and password, then I log in. I show you what I mean with all stocks turning red. Because I know there are people who lost money that day, and there are those who now are will gain this week. Those who managed to buy some of those stocks that time. So I'm just waiting for it to connect. Then I share my screen because I have to put my username and password. And most of these stockbroker platforms are the same. They are done by the same developer. If you look at the look and feel, only that some of the brokers are ahead in terms of innovations. So whatever I do with the IB, you can always do with another broker, as long as the platform is the same. If it is not the same, the only difference comes in terms of display. In terms of the data, it is similar because they are getting the same data from NSE. Just waiting for it to open. It's a bit slow. Let's see. Let's see if I can connect the app. Maybe the app will be better. Let me see if the app will connect. Online is a bit slow. And put the questions on the chat. Let me just see if I can connect the app. Yes, if it connects, then we use the app. But I would prefer to use the online portal because it has some additional details. Like the platform is offline. So as I wait for that to come up, let me just share the screen again. We just proceed. Once I'm able to connect, then we can see. Yeah, it's a bit slow. But what I mean with the market turning red is where all stocks, you see there is two arrows. One, it's either green or red. They all turned red. What does that mean? In the market, price volatility is not guaranteed. Price can go inside. You are trading one day and everything is in profit. Then you wake up, even in the middle of trading, all the arrows look down and they turn red. I wish it can connect because, yeah, let me just log in. So it is a bit slow. Let me log in, then share this screen. Let me share. So let me remove my referral code. So this is the online platform for AIB Access. Even for other brokers, it is similar. It is developed by the same developer for I think 99% of the brokers. So whatever I show here, it's the same thing. You can do with another broker. Now, if you look at the screen where there is the list of stocks here, notice the arrow. Some are green, pointing up, meaning the price, like for ABSA, price went up. BAT, arrow looking down, price went down. And notice most of them, they are green. Last week, they were all red on Monday, meaning what? The market looked like it crashed just a single day on a Monday. Then Tuesday, the same thing. Wednesday, some of them started turning green. The only stock that didn't turn red was GLD. That gold. Let me see if we can see the price I was talking about, buying very low. Notice on the graph, it has gone to around 3,000 within the last 3 months at one time, maybe a single execution. So what that means is when you get into the market, don't expect all arrows to be red, to be green. At one point, they may turn red. These are some of the risks you need to be aware during volatile markets. So then how do you reduce your risks? One, diversifying across sectors. Don't just buy stocks from bank sector. What if banks are affected? Profits decline, dividends decline, prices go down. Don't put all your money into agriculture sector. What if we have drought? What happens? What if we have El Nino? What happens? Don't put all your money into insurance sector. We already have an issue, which I think there is still debate on who should be paying who. So when you're investing, make sure you have at least diversified across sectors, and you don't need to buy all stocks. It all depends on the money you are putting in. Secondly, avoid putting too much money in one stock. What if that stock drops, stagnates at a lower price? You may never be able to sell that stock unless you want to sell at a loss. Then maybe it is not giving dividend. Then have ABSA Gold in your portfolio. Let me show you on that screen why you need to have ABSA Gold, but not at the current price. Don't buy ABSA Gold at the current price. I know there is some information circulating that the war in Iran may affect the price of gold, not in NSE. NSE is not affected by what is happening in the world. So if you go to GLD, it is the one now I'm showing graph on the right side. Notice this is just a single day on Friday. Price fluctuated between 6,700 and 6,100. If you are doing intraday, you could have bought maybe at a low price of 6,100, then you sell it around 6,600. You have already made 600 from one unit of gold. What if we do 3 months? There's somebody who managed to buy this gold, the same gold at below 3,500. Right now, they're in a profit. That's why you need to hold gold as part of your portfolio, even if it is one unit. How do you buy it? You click on it's only that this screen here, the offer and split is not populated. Market is closed. So you click on the buy button. You come to GLD. The first thing, you want to put quantity, minimum of 1, or depending on the amount you have. Leave order type as a limit. In NSE, never use market. Never use market. Market means go and clear any price. So if gold is trading at 6,700, that's what you buy at if you put market. Market to limit, never put it. If you are saying go and pick me whatever is there, if you're not able to fill my order, convert to the current price. Don't clear the other prices. For market, you clear everything. So you use limit. Leave it as limit. 1 unit. Notice the price. And this is where we make mistakes. Gold, you can even buy with 1 shilling if somebody makes mistake. And you can buy it at 12,000 because that is the limit. The limit is 0.01. The highest, 12,460. If you're smart enough, you can even put a price of 1. Change validated to GTD. Put it 1 week. Why am I saying this? There is somebody who wants to sell in a rush. And that's why you need to check the platforms you people you are trading with. If a platform allows you to just put price blindly, just move to another platform. You will make mistakes. If I submit this order, it won't go anywhere. You can leave it as a delivery or intraday. Delivery is where you buy today, you wait for 3 working days to settle. Intraday is where you can buy today and sell. Now let's see the magic here. I have put to buy 1 unit at 1 shilling and I submit that order. Let's see whether it can be accepted by the system. It's already there, order placed, because I'm within the limit. What if somebody comes, they want to sell gold quickly, 1 unit. Now this is somebody selling. See, I've already put an order to buy 1 unit of gold at 1 shilling. They make mistake because they are in hurry to sell at market. Remember, they don't quote the price. You can't change the price and you can't change anything here. They click sell. Remember, it is market. It doesn't give you a price. Maybe that day, by luck, nobody else have placed an order to buy. It's only me who have put 1 shilling for gold, and they click submit. What will happen? The order will come and match with my order of 1 shilling. And remember, any executed trade at NSE can never be reversed. Why? You saw the prices. The screen allowed you to put the prices to adjust anything that would have prevented you from selling at that price. So I, as Peter, will come and buy my gold at 1 shilling. Remember, I bought it at intraday. The same day, if I manage to get at 1 shilling, I can come now and sell at the market price. What is the market price? 6,500. It's not manipulation at all. It is just the system settings at NSE. These are settings from NSE. I've said the price range for gold 0.01 to 12,460. If somebody makes mistake of selling at market and you have put your order to buy 1 unit at 1 shilling, they will match with you if there are no other orders above you. That is the risky nature of market orders. So let's see from this screen whether we can see BAT, the highest it has ever gone. For the broker platform, I think it has data for 1 year. Stockanalysis.com have data from inception. Allow me to stop sharing this. We come back to the platform. I think I've quickly taken you through how to buy shares at a cheap price. Remember, the mistakes you make at NSE can never be reversed. So if I'm putting an order to buy stocks that are not volatile, like Absa Gold, it's only that these days, because of the interest in offshore markets, there are people who are trying to buy at a lower prices. So they block, it's called the order book. So when they block that, it's unlikely you get at 1 shilling, but nothing stops you from putting to buy at 1 shilling. Actually, I would charge you. Just put your order there, put for 1 week. It will only block 1 shilling in your account. Just put Absa Gold. Even at 0.01, just leave it. There is nothing wrong you are doing. You are not stealing from anyone. You have just placed the order. There is somebody who will come and sell quickly at market because they don't understand what market is. They will sell at your price. And an order that is executed, it can never be reversed. So you buy at a very low price. Then again, Absa Gold, and I hope I'm sharing the same screen with the presentation. Absa Gold, when prices go down, if you're able to accumulate at lower prices, 3,000 and below, just buy enough stock of it. Buy without selling. Then when there is no one selling, it is you now offloading them to the market. You bought at 3,000. You come now and start selling at any price you feel like. Remember, there are people who are still buying at market. They can hit your high prices. So for gold, it's more of a speculative asset. Don't buy too many stocks. Just buy a few. Then you can start offloading one at a time. But target when prices are low. That is when the demand side there is nothing. That time try and buy at low prices. Use GTD. Even now I've told you, just even mine, so you have seen, I will not cancel it. It is the system that will cancel. And I will keep on refreshing that order until maybe one day I get. Why am I saying this? Tomorrow morning, market opens at 9. Brokers submit orders from 9 to 9:30. Even you are able to submit orders with the price. You all end up in the market queuing. Take a scenario where there is nobody else who have put an order to buy gold, and you are the only one in the market when market opens at 9:30. Because my market opens exactly 9:30. That's when the first transactions happen. Then there is somebody who is selling Absa Gold at market. So when you see prices fluctuating such that somebody is buying at a lower price, there is somebody who made a mistake of either selling at market. And if you see there is somebody who have bought at a very high price, they made a mistake of buying at market, while the sell side put a limit order. So always have gold. It's the only one I can tell you. SMWF, it has a small price movement, and you may need a lot of money to make money out of it. Gold, with 1 unit, we have seen on Friday alone, you could have made your 600 bob per unit. If you had 10 units, that is 6,000 from 60,000 in just 1 day. But then getting those 10 units, you may need to be very careful. It is not subjected to 10% rule. So again, you also need to stop reacting emotionally to daily price movement. We are coming to what happened on Monday. We panic, market drops, we all want to sell. We even push prices way below even what government have targeted. In this market, you have to be very smart, more than the government. You can easily buy at cheap prices. So those people who panicked and sold, they sold at losses, most of them. And now, The shocking part is, tomorrow you wake up, everything is green. But what are we seeing in social media? People saying the market reacted to war in Iran. How is Iran related with the NSE? There is no relationship. How is the US connected with NSE? There is no relationship. Israel and NSE, there is no direct relationship. That war only affected US markets. Because now every investor in Nasdaq would just panic. They want to sell, price goes down. But in NSE, it's us panicking. Unless foreigners are selling to get out of the market, and that data should correlate with the data at CBK. Nobody should ever tell you foreigners are leaving. Hopefully I didn't close the portal. Let me just show you again. Let me just log into the online portal. And as I said when we started, the trainings are not affiliated to any broker, so you are free to join anytime, free of charge. No charge at all. So we are back to the online portal. Let me see. You want to know foreigners are buying and selling. You don't need to Google anything. On the broker platform, if I scroll this screen, let me zoom it out, the table, if I scroll to the right, past this data, there's somewhere there is foreign buys and foreign sales. Like ABSA, you can tell it is the first one. There were more sales from foreigners than the purchases. But the other stocks that they were buying, let me see which one is this one. This could be Coop, if I'm not wrong. BOC, they were buying. And this one, now you sit down and start asking yourself, why are foreigners interested in some of these stocks? Why are they not selling? If you look at another stock here where they are selling heavily, I think this should be, which one? I hope it's not KPC. It is Equity Bank. They were heavily selling because they have already reached their profit target. When you see foreigners buying, know there is something that is coming soon on that company. Either they will announce good results or a positive news. You want to buy when they are buying, then you sell later when prices go up. But again, who are these foreigners we are talking about? We have two types of foreigners in Kenya. And I think these have been said time and time again by Didi Nyoro, Honorable Didi Nyoro, that we have Kenyans who are foreigners and we have foreigners who are foreigners. So you have also to be careful. Which foreigner are we talking about? Is it a foreigner from outside the country or a foreigner who is a Kenyan but pretending to be a foreigner? That data you can always get from CBK. If exchange rates have not moved, it means money have not moved out. There is nobody moving out of NSE. So when you're investing, you also want to have access to exchange rates. On WhatsApp channels, if you go to your WhatsApp, there's somewhere you can see, I think, updates and channels. Just search for CBK. Just follow them. They usually post daily rates. If you notice there is a change in USD, just know the foreigners could be getting out. But also, it could be inflow from our Kenyans who are working in diaspora. So you always need to compare the two. Foreigners selling, it has to be reflected in central bank if they are exiting. However, a foreigner who is a Kenyan, they are exiting to buy another stock. All that money is retained in Kenya economy. That's why when there is price drop, because price drop have for the longest been blamed with foreigners exiting. When there is a price drop, first go to that screen. Foreigner selling, you confirm yes, but check CBK. So that it is not a foreigner who is a Kenyan who is taking profit with you. A good example, Diamond Trust Bank. And I can see we are still chasing that share. Who was selling? We are the ones buying. But there was somebody selling to us, taking profits slowly. Then he leaves and goes. He knows in the next few weeks, market will be shocked. Price goes down, he buys back. I don't want to say the names here, but that is the truth in NSE. If you are not careful with what is happening in NSE, you'll be selling your shares to other people. You'll be buying from people who are taking profits, then you sell to them when prices go down and you panic. Never panic. I'm coming to what happened on Monday, so that at least when you see the market turn red, that time you actually even jump and crap and come and put even more money, buy more shares. So the key risks at NSE, it's not market volatility. It's about who is selling and who is buying. And then the biggest risk is for you to be forced to sell at the wrong time. Why? I hope there is nobody from AIB Access on the call. But if they are there, then we said this channel is not affiliated with AIB. We have seen recommendations where somebody tells you to sell a stock. And most of you have reached out and with an extract of that, do I sell? And what have been my answer? Before you sell, go to your portfolio valuation. Broker never have access to your portfolio valuation. They have over 100,000 clients. So if Peter is telling you to sell bridal without asking for your portfolio or your client code to check what is the makeup of your portfolio, I'll be lying to you. I don't know the price you entered at. I don't know the profits. So if I'm telling you to sell, what am I telling you to sell? I don't want to talk about this so much because I've seen even other brokers doing it. Then when they tell you to sell, the next week, price goes up, they are telling you to buy. So you sold at a lower price, you are buying at a higher price. It doesn't even make economic sense. It doesn't make. You buy Safaricom at 30. I'm telling you to sell when it goes to 33. Then when it goes to 40, I'm telling you to buy. Which mathematics are we even doing here? There are commissions you are paying. I said in the last tutorial training, when you see a self recommendation, just flip quickly. Just flip that page quickly. Go to the next one. Don't even be tempted to sell. If you want to sell your shares, always check your portfolio valuation. Portfolio tells you whether to add more or to reduce. At the end, we'll have a walk through the app, because I know most of you are using the app. But nothing stops you from using online portal. It has extra details that you don't have on the app. One of them is the graph, very important. The other one is that table with a lot of data, because that table tells you who is in the market and what they are doing. Foreigners, what are they doing? You can even predict the next price move. Let me just share this. If it is connected, it's just logging in. So your portfolio valuation should be your guide to sell. Never sell because of a recommendation, because that is somebody who have not seen your portfolio. Actually ask them, you have over 100,000 clients. How do you recommend to them to sell? And you have not seen that portfolio. So I'm just waiting to see if it will connect. If it doesn't connect, we just continue. I'll just do a video on portfolio valuation, but maybe the app will connect. Let's first go to the presentation. So for any sale recommendation, irrespective of the broker, go to portfolio valuation. Check, are you in a profit? I want to share the screen. Hopefully I'm not thrown out. Confirm you can hear me on the chat. I think there is a fluctuation. Just confirm before we proceed. You can hear me on the chat. Okay, and I'm audible. So let's continue. So I've said for any sell recommendation, it has to come from your portfolio valuation. And that's why I said, when you want to be guided on the sell position, share your portfolio valuation with the person you are talking to. They can see your portfolio. That time they will be able to guide you. If somebody is guiding you to sell something they can't see, then they are giving you wrong recommendation. Why? You could have bought at a higher price, market have gone down, and I'm telling you to sell. You're selling at a loss. Buy decisions. For you to buy, you have to know what is happening in that company first. So basically, you have to understand that company. Never buy shares for a company you don't know what it does, because you're buying blindly. Then you have to know the price direction. Where are the prices going? Are they going up or down? If the graph shows you the prices are going down, that is the time to add. If the graph shows you prices are going up, you have a decision to make. Do you buy at the current price or do you use GTD? Remember, GTD only works well when prices are going down, because eventually prices will come to your level. However, if market is going up, nothing stops you from using GTD, but remember you have to use the first price or the second one. Only that market is closed, there is no data to display that, but hopefully I can get access to the graph. The graph will tell you the direction the market is going. If market is going up, always try to use the second price or the third price on the bid side if you are buying. If you are selling, it's the other way. If it is going up, you put the highest price possible. Give it GTD. Don't be in a hurry to sell. If market is going down, if you're buying, put the lowest price on the bid side, GTD. On the sell side, if it is going down, remember price will keep on going down. You use the second level of ask or offer side or the second level, depending on the quantities that are there. So never be forced to sell at the wrong time, because that is the worst mistake you can make. Immediately you sell, remember that transaction is irreversible. You can only now accept to buy at a wrong price again. So the highest risk at NSE is selling at the wrong time and also buying at the wrong prices. Remember, all these recommendations, I'll be open with you. They are just estimations. If you don't believe me, I wish I had one recommendation, not from AIB, maybe from another broker, because I don't want to use the broker I work with. I wish I had a recommendation. I show you how it works. I'm very sure right now, the recommendation is Safaricom, you buy at a lower price. Obvious. Safaricom, I will explain why you need to buy even below 30 shillings. You should be buying at 28, 29. If it even goes below that, the better. Why? The price I keep on saying, it is controlled by government. Remember, government is selling part of its shareholding to Vodacom. There is no way they can allow that price to go above 34. It will look like Vodacom are buying Safaricom at a very cheap price. There is no way they can allow that price to be close to 34. Again, what stops them from selling to the market instead of selling to Vodacom? That is the answer they should give. They have to make sure the price is way lower. It looks like it is discounted for even a common mwananchi to buy. Would you buy Safaricom at 34 when it is trading at 28? No. But Vodacom are willing because it looks like it's a good price to them. What if that price is within the share price is around 32, 33? Nothing stops a politician or even a civil society to go and lodge a court case that deal should be sold to public. It is the same price in the market. Why are they selling to another entity? If it goes above that, then it destroys the deal. Government have to be strategic, make sure the price remains below that. 28, 29, 27. It's a very good entry price. But somebody will come and tell you, buy Safaricom at this because price is going down. Results, it has nothing to do with the results. You already know this is a controlled price. Otherwise, during dividend, that price would have gone above 34. And I would like, if NSE, maybe there's somebody in NSE, I would like them to give a contrary opinion to that. And they come with a proof. Because me, I see, I have given my proof. Government is selling. Why are they not selling to the public? They have to make sure it doesn't look convenient for the public. Again, it has to look a good deal to Vodacom. Make sure price goes down. Now, another stock is Absa. You be told it's a good stock to buy right now at 30, 31, below that price, 29. It is a good stock. Why? Last Monday, it was added to MSCI Frontier Market Index. Foreigners have to buy. And that's what happened on Monday. They are buying, but apparently the price also shot down. Why? We are coming to that. The price of Absa should be going up. And don't be told a target price. Don't chase a target price. You buy, knowing I'm buying Absa to hold. I'll only be dictated by my portfolio valuation. When I have enough gains to sell off. But remember, when you sell, you may never get that stock back at that price. Another stock you see in the recommendations is BAT. It's come dividend. It's trading on dividend, but apparently prices are going down. Why? Just 2 trades can move BAT because of its price difference. Then you'll be given a target price of 600. I can tell you, hold BAT. It is also in that MSCI Frontier Market Index. Foreigners invest in it. What stops that price from going back to 1,000? I wish that screen could open. Don't know why it is not open in stockanalysis.com. Let me see if I can get that graph. Don't know why it's saying no chart data found. Maybe they are not connected to NSE because they usually pull that data from NSE. You would have seen, but check for yourself tomorrow. BAT price, the highest it has ever gone. So never sell your shares too early, because again, in volatile market, price moves either way, and you may lose by selling too early. So now you have invested, you have built your portfolio, you have diversified different sectors. At one point, you may need to keep on reviewing your portfolio. We know when you get to the market, you're just buying. When the prices go up, you sell. Then when prices go down, you buy back. But then when you're doing that, are you factoring in commissions and everything? So most of us, including me, we usually buy shares and never check our portfolio performance. Mine, I have the luxury that during trainings, I have to show. Sometimes I find myself using my right account instead of the demo account. So at that point, I check the portfolio. Always make sure you are at least peeping to your portfolio once every month. Even if you don't have time. Or once in a while. Always check your portfolio. Check the market. Actually, when you log in, don't first go to the market, go to portfolio, see how it is performing, and don't panic whatever you see there, come back. What then do you need to check when you are checking your portfolio? The first thing is portfolio balance. Check which stock is dominating your portfolio. You could be having a portfolio where one stock is the one taking all your cash. What if that stock is affected? Maybe that stock, that is holding much of your cash never moves, but also never gives you dividends. Always ask yourself, from the portfolio I have, am I overexposed to one sector? What if that sector is affected? Also check, am I holding too many speculative stocks? You need to trim them. Uchumi, every day. There is Kenyari have also entered into that list. There is KQ, where you find price keeps on fluctuating. At one point, you are not even able to buy. At one point, when you buy, you are not even able to sell because price keeps on moving either way. Don't hold too much of those stocks. And if you can, if you have them, always target to exit at high price. Put a sale order at the highest price possible. Leave it with GTD. Even if market is going down, just leave it there with GTD. If you are not able to sell. Some of these stocks, they end up messing your portfolio. Where the NSC are thinking the market is going up, you should be thinking, I've gained actual cash, I've sold. Otherwise, you'll be holding on to paper profit. And you end up selling that stock at a loss. Ask those who bought Uchumi. They have been playing with prices. At one point, they were told it will go to 2 bob. It has gone even to 2 bob. But how many have managed to sell? The data speaks for itself. Go to that screen for AIB Axis. Check how many, because it has the details of people who are selling. Check how many people who are able to sell. So too many in your investment, because when they turn red, especially now we are going to announcement period, it may hold forever that red. Those are stocks you don't want to have them in your portfolio. So don't hold too many. Nothing stops you from buying a few just for speculative purposes, but don't commit all your money. Commit what you are ready to lose. Again, Absa Gold, don't put too much money. Even 2 units are enough. So a good portfolio and a healthy one, it spreads risks across the sectors. You have some stocks in bank, you have some in agriculture, you have some in manufacture, telco, energy. So that when one sector performs well, you can even decide to take profit. And always keep rotating when you're investing. If you don't have a lot of money, then let's say I want to invest even 100 shillings, because you can invest that. You can just start with one stock, first grow it to some level, maybe 1,000 shares, move to another one. And don't try to struggle with expensive stocks. If you have like 1,000, that's what you are putting, you can even decide to be buying BAT alone. Buy some stocks when it gives you some good profits, because BAT can move even with 60 shillings in a day. So you can tell how much you can make. When you make enough profit, move to another stock. That is for a speculative trader. If you're an investor, just buy, hold. Wait for dividends. So always make sure your portfolio is balanced. One stock is not dominating your portfolio in full. Always have a balance. Then also understand when to hold. Hold means you are not selling. If company fundamentals remain strong, why would you sell? Look at Safaricom. Most people are panicking and selling. But is this company being affected? Has the operations stopped? Nothing have stopped. It's just that game the government is playing. Just make sure they sell their unit. Once they sell, and I'm coming to Kenya Pipeline IPO so that you understand how government plays with you. If dividend outlook is stable, then don't even touch that stock. BAT, why would you sell? Stanchart, Stanbic, why would you sell? Unless price is way high that it has never gone to that level. I wish stock analysis, I'm not sure why it is not showing the prices today. I wish it was to show that graph. I would have shown you how you use it. But the graph, it's something self-explanatory. It's not candlesticks. It is a straight line graph. In NSC, never use, well, actually in stocks, physical stocks, never use candlesticks. You get lost. Never use candlesticks. I know it is there on the AIB Digitrader and also other apps in the market because they are the same. But I'll be asking the developer to give us the line graph because that's what works with shares. You only need to know the direction the prices are moving. So if dividends outlook is stable, don't sell unless price is way too high. Then temporary market panic. It will cause the prices to drop. That time hold your shares, don't sell. Unless you need money urgently. And always check why that price drop. That's why I said always have some cash in your account such that when market just drops by. So in NSE, there is only one button that stands between you losing money and making money, the sell button. It's not even the buy button, the sell button. Immediately you click that sell confirm, you are done. You have removed yourself as a shareholder, you have to buy back. So the best action in NSE is actually to do nothing. It's better you don't even buy it, but you hold your shares than selling a portfolio that is in profit. Always check the profit levels before selling. And always have a target. Like if BAT goes to 80% in gain, I would sell. Then when do you add more shares? Adding means buying more shares. You have seen me buy APSA Gold, placing the order. And I've shown you how to also place the buy sell order on the portal. I don't want to go into details of that because there is a full video on that. Adding more shares to what you have only makes sense when strong company becomes temporarily undervalued. A good example, Safaricom. That one I think I have to sing until that day that deal closed. Safaricom is undervalued. It is a strong company. Fundamentals have not changed. ABSA, you still have an opportunity. Actually, if price goes down further, buy. We have BAT, it is come dividend. If prices continue to go down, buy. If you have bought at high prices, actually buy now at lower prices. Do something called dollar cost averaging, lowering your costs down. Kengen, don't wait for the new board to come in price. That price will go up. Everybody is waiting. And in the next video, I want to do some analysis on Kengen shareholding. I'm not sure whether there is anyone who knows how the shareholdings for Kengen works. Just to know the free float shares. Kengen looks like much of the shares are held by the public. And maybe government owns a few shares. Because that price doesn't go. Or, while the shares are more, then government through NSSF have shares which control that price. Also, you may want to add when institutional investors begin accumulating shares. But remember, you have two types of institutional. We have fund managers and we have somebody called NSSF. So always differentiate the two. How maybe you can tell with price movement. But when you see prices starting to go up, you go to the foreigners are not buying, then there is an institution that is buying. Check the quantities that are clearing. If the volumes and turnover are way high, then an institutional investor is accumulating. That time accumulate with them. And when market panics, it creates opportunity. We had that opportunity last week. It is still there even this week. Then when do you exit? Exit means selling. One, when company fundamentals deteriorate. That is when the company prices are going down. This company is making losses and you can see there are no chances of revival. That time, exit. at a loss, buy another stock that is giving dividend, let that dividend recover the loss, and after that, never go back to that company. Which company am I talking about? Here we have KQ. KQ is affected. It is making losses. Even with restructuring, already now, their major route is closed. It's Dubai. Expect them to announce another loss for some time until that war ends. We don't even know, maybe something can happen in between. They are hit by claims. So if you hold such companies, you don't want to hold into hopes that this will happen. We had Mumias. It used to work like that. Government bails it out. We come and buy. It is in operation. Then it goes down. Eventually, we were rocked. If dividend is cut significantly, it means that company is making losses. You have to know, why are they not giving the dividend they used to give? Why are they cutting? Could there be something that changed in between? Then, very important, when you had said you're investing to make money and that money you don't see it, you have to change everything. Exit those stocks, go to stocks that make sense. A good example, there are people who are getting into Uchumi, Kenyari, there is KQ, there is Frame Tree. When they just see there is a price rally, can I tell you, only a few people, maybe less than 100, because we usually see it is 100 transactions in a day, divided by 2, those are 50. And maybe out of these 50, there are a few who have done duplicate trades. They're the ones who are pushing the prices. But NSE have to report as if it is the whole market moving. And we want to buy into those stocks. Yes, you can buy. If you're struggling to buy, then you'll also be struggling to sell. Never buy a stock that you are struggling to buy. So if your investment thesis no longer makes sense, that is, you entered into market to chase the prices of Chumi and you cannot get that price, just exit. Go to a stable stock. And also avoid emotional decisions. The reason why you find most people losing money is buying during the hype. Remember, you are buying when prices are going up, and maybe that point you are not able to buy. Or selling when there is panic. When prices are going down, you ought to sell. If you don't want to lose your money, focus on the data we have seen. We have seen it on the online portal. For brokers, they have that portal. If they don't have a portal and they don't give you online to trading platform, that broker is not doing you justice. You're just investing blindly. Go to a broker who gives you access to that data for free. Analyze what is happening, understand what is happening, and it is very easy. If I'm able to tell Safaricom it's government which is controlling the price, even any other person should be able to know. The panic you saw Monday, Tuesday, Wednesday is just one entity that created that panic. And I'll tell you why. You have to shock a market that is already shocked so that you don't create another shock. I don't know whether you have understood that. You shock a market that is already shocked so that you don't create another shock. Why? If the market had not gone down, right now we'll be talking about panic. Based on what happened, we are coming to that. You'd have seen market drop, but government is strategic. First shock kidogo. Well, people are dealing with this shock. You bring now the bigger shock. When they are still digesting what is happening in the market, you have already finished Sorry for that. You can hear me? Can you hear me now? Can you hear now? Yes, confirm. Sorry, I think I got dropped by my network. Let me just share again. I'm not sure where I dropped. Just let me know at what point I dropped. Let me check WhatsApp. Like somebody is saying I check WhatsApp. Let me see. Was it at the point of investing with data? I believe that could be the point. Huh? So I think let's continue. So what I was saying is, what happened on Monday? The market shocked an already shocked market. So they knew what they were releasing would shock the market. So what do? First, make sure the market drops. And for those who don't believe somebody can control the market, I would like we discuss this on the chat. I would like to see that argument. You make sure on Monday, very early when people get in the market, price drops everything apart from gold. What does that tell the market? And it is coincidental with war in Iran. So we will think gold is doing well. So this has to do with Iran. So you want to sell because this war will take maybe another 1 week or 1 month. But government is strategic. When you are discussing that, they have released KPC IPO. You saw what they released. We are coming to that. Before you even recover from the market drop, they have given their results and they have gone and closed that chapter. The next thing you see is a very good announcement in the week. You won't miss one within the week or next week. That will excite the market and everything now turns green. So there is somebody who is asking whether ZD have GTD. Doesn't have. It's only that I don't want to talk about ZD right now. I'll talk about it at the end. It doesn't have because they don't have access to the broker platform. So there is no way they can save those orders. And NSE cannot allow GTD orders on their platform because they carry very huge risks. That's why you're not able to do on ZD. So always avoid emotional decisions and invest with the data. Always check what is affecting the market before you make any decision, even a buy decision. We come to global conflict and gold. Again, this aligns with what I was discussing earlier. Yes, when there is a global conflict, people will move to save assets. And mostly is either gold or silver, because those ones they trade in international market. And you find prices going up. But then, in NSE, it is the opposite. NSE prices, they are driven by me and you. In global markets, you find the prices in the market actually track the price of that gold or silver. So if it goes up, it will go up. If it goes down, it will go down. But in NSE, everything is different. It is me and you. We can decide where the price goes. And as I said, entities like NSSF and institutional investors, they don't invest in gold. So Absa Gold, the one you see on broker platform GLD, it tracks the global gold price. And as we saw, it can help you reduce portfolio volatility. That is by buying a stable stock. You can buy 3,000, wait for the prices to go up. You don't need to panic because it doesn't have a lot of people. And it also protects your purchasing power. It is you to determine the price you want. You have seen you can buy from 0.01 to the highest 12,000. and also helps you now move from just shares alone in your stock to having a defensive asset. But remember, the price may stagnate for quite some time. You have to be very strategic. If you're buying, put the lowest price you can think of, put GTD, leave it there. If you're selling, put the highest price, GTD, leave it there. Keep on refreshing that order. At one point, you may get. So now we review a few of NSE stocks that I expect you to buy. One of them is Safaricom. Price is already capped. And we know that after that deal goes through, price will just go up. BAT, it's come dividend, prices are going down because of that market shock. They had to create that, and it will go for some time. I think even next week until the shares are loaded in your portfolio. There is Absa Bank, come dividend and foreigner interest. But you are still seeing the prices going down. Again, shocking a market that is already shocked. Before we digest the shock that was there, prices will just start to go up. You forget even KPC IPO that time, you want to get into it now as a share in the market. Then you have Kengen, they are doing board restructuring soon. There's already a proposal. There is also Kenya Re, though I didn't want to talk about it here. They're also doing restructuring. That's why you're seeing the prices going up. But it is a stable stock. It's not like Akina Uchumi. So before getting into any of these stocks, always understand price movement. Are they going up or down because of fundamentals? Are these companies still strong? Like now, I've told you some of these companies, the prices going down has nothing to do with company performance. It's just the panic that is in the market. And this is short-term market pressure. Next week, now from Wednesday, you see the market stabilize once KPC is listed, and it starts to trade at NSE. Always check dividend potential. That is dividend yield. Dividend yield is a dividend given divided by current price. It tells you how much returns you get by buying at the current price. But that is somebody who is buying. What if you have shares? You use your average cost. So it tells you the returns based on the cost you have incurred. What if you're adding and you have shares? Then you have to use average cost plus the price to determine your yield. So that's how you calculate the yield. It's not just with the price. I know that formula, I've been there for long. Dividend divided by price times 100. That's for somebody who is buying. What if you hold the shares? It is dividend divided by your average price. It is there in your portfolio valuation. If you already have shares and you're adding more, then it is your average price plus the current price. You divide now dividend with that. But remember, you have to do the averaging to get the average cost when you add new shares. That's what now you use to divide the dividend. 10 times 100. Then you can tell that if that share is giving you good returns in form of dividend. Also check dividend stability, because some of these stocks, the ones I've said here, they have been giving dividend over and over again. I don't think there is any of the four which have ever cut a dividend. They usually give even twice some, apart from Kengen, which gives only once. And the earning strength. These are companies making money. Now, from mid this month, banks and other companies will start announcing results. Check the earnings. Are they strong? And most of the companies will actually announce good profits. Then also check institutional versus retail activity, because this is where now NSSF they come in. If a large institution like NSSF is buying shares, it will influence the market direction, liquidity, and long-term price trades. You have seen with Safaricom, you don't even need to be told. You have seen it with Kenya Power. You have seen it with Kengen. Anywhere NSSF had is, just check the price movement. You can tell when they want the prices to move and when they don't want prices to move. Why am I saying NSSF? Everybody who is working, I think we contribute NSSF. Always check your returns. They are usually lower than any other pension scheme. Why? Because most of it goes to NSE and government boards. Though they also invest in other products. Huh? So once you understand those 3 points, you will never panic. When others are panicking, you are buying. When they excited, you are the one selling. I've said Absa Gold, if you're able to get those units at a lower price, let's say 3,000, 3,500, accumulate as many as you can. At 6,000, you'll be the one providing that liquidity. Profit of 3,000, you can never get that anywhere. Now we come to what shocked the market before we wash. What shocked us after we had been shocked by the market? Government announced their allocations of Kenya Pipeline IPO. They knew these results would shock the market because we knew it was oversubscribed by far. We knew retail and institutional investors had already invested in KPC IPO, but the data on the ground spoke otherwise. And because government knew this would shock the market, they had to first shock the prices. All prices turn red. How they do it, Peter will tell you one day. But NSSF factor always plays part. They are veteran traders who have been trading even before I joined the market. They know how these things work. They have the big clients. They can influence those price drops. You only need to come and place huge buy or sell orders. Clear demand downwards. It only goes with say 2% because they may lose 2%, or even if they had made profits, maybe they are ceding 2% of their profit, but they have achieved what government wanted. All prices to look red. As you struggle to understand what is happening, now government on the other side is releasing Kenya Pipeline IPO. Institutions, NSSF being one of them, took 40%. Who is NSSF? It is government. Government itself retained 35%. So they already have 75%. We have East Africa institutions, which is Uganda and Rwanda oil companies, 21%. Add it to 75. You have what? 56% in the hands of governments. Because even those companies from outside the country, it is just government of Kenya. So what does that leave? You can see foreigners, 0.02%. And I am very sure this is a foreigner Kenyan. Then retail, the free float you have is 2.56. Out of that, remove 1.5 because it is in the hands of long-term investors. You only have 0. something to speculate in the market. That will determine where the prices go, how this stock volatility will be. But remember, NSSF can easily control both sides, the Kenyan way. So this could be another Kenyan or another uchumi. Two people moving the prices up, or two people not able to break the ice. Let's wait and see how this retail percent of 2.56 will control the market. It will not. If government wants this price to go up, it will. It will only stop offloading NSSF shares for sale. The rest, they are not tradable. Government, they are not tradable. Rwanda and Uganda, they are not tradable. So you can tell who will be controlling this price. Huh? You already have a story of Safaricom. So basically, the IPO was not heavily oversubscribed because retail 2.5%. So basically, government retained the 95% through NSSF itself, Rwanda and Uganda, and only few portion is with the public. What does that mean? Out of that public ownership, only very few shares are available for trading. If you didn't understand this thread, You may need to look for these new notes so that you understand why I'm saying 95% ownership is government. 5% is free float shares at NSE. Those are the ones which you'll be trading. But remember, most of it is held by long-term investors. Speculators, we are very few. Very few. So we have a few very limited free floats. That is shares that are available for trading. And therefore, government will still have control of the most shares. And that means this price may not be that volatile as we would expect. And it is the government now to dictate where the price goes. If price goes down, it is the opportunity to buy. This now explains why the market dropped. We thought it is Iran and this war that is going on, but it has nothing to do with that. Those factors, they affect global markets, not NSE. The release of these results here needed to first shock the market so that when they are releasing these, you're already shocked to even look at those numbers. And after the release, we have seen stocks going back to green. You have seen those green arrows. And now expect after it is listed, full-blown green comes back as if nothing happened. So never panic, because the release of KPC IPO had nothing to do with your portfolio. Most of us panicked, you sold. We come to an SSF factor in the market because this is the major player in the market. They hold much of the stocks. Because they're the ones who hold the large pools of retirement savings. All these they put either in equities, government securities, real estate, strategic investment. But remember, government, when it wants to control the market, now that fund will be put in shares, creating excessive demand which can push prices up. So that's why you have been seeing some of the rallies. Then at one point, they may want to take profits. They broke. They may also want to block the market because they know like 1 million shares of Safaricom before you clear it will take some time. And when you clear, they also buy at lower prices, come and sell at a higher price. They also know how to do day trading. Then after that, when the deal is gone, they release the market to play with its factors. So basically, NSSF is the largest institutional investor at NSE, so that way the government can easily control the prices. Because they will put a very large visible order just to spike the market. Then put different orders at different levels. Before you know, the market cannot move. That's why if you look at the previous video, I did a full training on market depth. And I'm still training on this coming training so that you understand how to identify some of these things. That you can only identify when the market is open. When you see a very huge order that is not reducing in quantity over time, know that is a hidden order. Because basically people will put orders and keep on cancelling and others being added on that price. If it doesn't change, price will never go below that price. Because what happens? They will put an order that keeps on absorbing any buy order you submit. Any sell order you submit is also absorbed, meaning prices will not move below or above a certain price. You only need, if you want to absorb demand, you only need to put a very large sale order. Hide it with that disclosed quantity. Prices will just be hitting that order. It won't go above that. The same thing, put a very huge buy order, disclosed. It will keep on absorbing the sale orders without prices moving. So you need to be very strategic when investing. Go to market depth. Make sure you understand how the orders have been placed. Let's quickly go through international markets because it's just introduction. Then I show you how to open interactive broker account. Then we come to Q&A. We have another 2 hours. I can take 15 minutes to do international markets. Brief introduction. I show you how to open interactive broker accounts. Then we come to Q&A. So international markets is where now you are buying shares from global markets, Nasdaq, New York, and other markets, not just NSE. You diversify. Here you get a lot of products and assets which are trading. So one of them is international stocks, just shares, where you're becoming a shareholder of those companies. Then we have exchange traded funds. This is a basket of assets in one investment. That is, when you buy one unit of ETFs, we are buying so many stocks inside it, small units. It's like when you go to the market, instead of buying one mango, one banana, one spinach, you buy all of them packaged into one. You buy as one unit. That's what is called ETF. Shares, other products packaged together, you buy as one unit. They help in diversification. Also, they carry low risk because even the person who have provided that fund will keep on rebalancing. Remove the stocks which are not doing well, retain which are doing well. So you find even returns are good. And mostly they are used for capital preservation, where you don't lose your money. Then you have commodities like gold and silver. Like now, there is a global uncertainty. Most people are going to gold and silver, pushing prices up. When the inflation rises or when the stock market drops, that is for international markets. So then how do you access? There are many platforms you can access from in Kenya. Many. But most of them, they give you CFDs, contract for difference, where you are not owning the share, but you're speculating on price movement, and you can easily lose even your entire investment. It's not like shares. Shares, you can never lose your entire investment because it means the value of that company have gone to zero, which is impossible. CMA will suspend it. In CFDs, you can easily lose even your entire investment. And that's what most companies give here. Because they know when you see NVIDIA, you know it is shares. But have you checked whether you're buying NVIDIA the stock or NVIDIA the CFD? I have seen a discussion somewhere about Dove. Dove is just a platform that connects to a broker. That broker connects to another broker. So ideally, you are going through 3 steps for you to buy. Though it is automated. The only 2 brokers in Kenya who give access to physical stocks is only Scope Markets Kenya if you open a stock trading account without margin trading. They are just there in Westrads. You only need to check their costs. But again, the main question is who owns the shares? Do they also go through another broker? Those, I can leave that to you to do some analysis. But check, do they go through another broker and why? That increases your cost. Do they also do dealing? Dealing is where you buy shares in your books, then you sell to the clients. So you're not actually buying shares from the market, but you can see the prices from the market. So you need also to check those when you're choosing a broker. The other broker is Interactive Brokers. This is an international company connecting directly to the market without going through another broker. However, the onboarding process is the hardest if you don't follow the steps, and the funding process is the easiest if you know how to do it. But then you also need to check the costs. Let's go to online. We'll open one account. I'll just show you how to open. Let me first share my PIN. because that's what I would like you to use, PIN certificate. So you download your PIN certificate because you need two things. You need your ID to open your IBKR account, and you also need proof of address. Proof of address, you can either use your bank statement, letter from the bank, any government issued document, and all those have to be within the last 6 months. So you either get a letter from the bank showing your address, and that address is what you're putting in IBKR, or you have any other legally binding document that is showing your address and have a date, it is the current. I'm trying to look for my PIN, hopefully I get it. Let me see whether it is this one. I don't share somebody else's PIN. No, this is not mine. Let me just get my PIN. You can even use your broker statement because it has your address. Basically, even that is the best because it has your address. So that is the PIN certificate. So you make sure the certificate date is the current, otherwise it won't go anywhere. So certificate date, then where there is registered address, make sure this address is what you are putting in. So your address and the date. Let me stop sharing that. We come to, might be exposing myself to KRA. The reason why I'm saying KRA PIN is the easiest is because you only need to edit the date, certificate date. If you have Adobe Acrobat, the PDF editor, you just change the date. Then you make sure when you're giving address, you're giving as it is in your KRA PIN. That way you get your account the following day. Actually, the same day, if it is not a weekend. So let me go to this link, interactivebrokers.com. Stop. Let me remove my VPN. So interactivebrokers.com. So you can search for interactive brokers. So the first one, you click on it. Disconnected. Let me see. Stop sharing. Let me reconnect my VPN. So you only need to make sure you have proof of address. That is the most important in IBKR. For funding, you can use the bank. So you only need to confirm with your bank how much they charge for Swift transfer because you're using Swift. If you're using M-Pesa, it uses a third party. That one we will do next time. For funding and the rest, we can do after. I want to do a full video on how to onboard on IBKR. Let me just connect to VPN. I see if it will connect again. If it doesn't, I think we can do the next video full onboarding process. But it is the easiest if you can be able to prove your address. That's the only thing you need to prove. Let me see if it connects. Looks like my network is broke. Let's do it next training where we will do full training on IBKR opening account. But the process is you provide your details. Make sure you are honest as possible as you can because they will validate those details. Have your ID ready. Make sure you capture details as they are. Don't try to use your ID as proof of address because our ID are older than 6 months. If you have a bank statement showing your address or M-Pesa, whichever statement that shows M-Pesa including your broker, use those address in the address lines. Make sure they are correct. Once you submit, at the end it will ask you to submit proof of the name, that is your identity card or passport. Then proof of address, now you attach the document, submit. The following day you have your account ready. So let's do it next time because I'm trying to refresh. Looks my internet provider have blocked. I may need to check why. But I suspect it's because I'm using Office VPN. Let me actually remove it. Let me see interactive brokers. Yeah, it is blocked. Don't be tempted to open account using the mobile phone. The mobile process is cumbersome. Try to use a computer or online. It's much easier. Now we come to Q&A. I hope now next Saturday or Sunday we can do IBKR. So if you have a question now, let's go to the chat and allow me to take a cup of water, then we come and continue. Just a minute. If you have any question, put on the chat. So let's go to Q&A. The first question, how to know how many years it will take a stock to return initial investment through dividend alone? What you only need to do, there is amount that you have invested. Let's say 10,000. If you buy shares today, prices will move maybe in a few days. So you need to add the amount that you invested, you add commissions and levies. That is there in the system. You can always tell. So the number of years it takes for you to return your initial investment is equivalent to the number of years you take dividend that pays back the commissions and levies. That cannot be estimated. I know where this question is coming from. There is that mathematics Didi Nyoro was doing, Honorable Didi Nyoro, where he said PE ratio is the number of years it takes to return your money back. And it's not him who said, he asked a question then the lady answered, and it was wrong. I think you saw his reaction. It was wrong. You cannot be able to estimate the number of years it takes to return your initial investment. Why? When you buy shares, your shares don't lose value to zero. It only requires that price to move above your average cost. You have returned your money, you need to sell. If it is dividend, it means that dividend have to pay your costs. So basically through dividend, you only need to know how much you have incurred to buy shares. How much loss have you made so far? Then compare that with dividend. So that cannot be, there is no formula for calculating that. I hope I'm clear on that. You cannot be able to calculate. And I think that clip is still on the internet. Just look at his reaction after that comment by that trade. He knew she confused people, but he had to go on. Instead of embarrassing her, she decided to support. But I know at the end of it, he may have told her it is wrong. P ratio is not the number of years it takes to return your initial investment. You only need to return the costs you paid and any losses which cannot be determined, because the prices, they are not guaranteed. Dividends, they are not guaranteed. How many counters should one hold for long term? If you're investing for long term, it all depends on the amount you are putting in. If it is small amount, then you don't want to split it into so many stocks. If it is a substantial amount, like you're putting every month 10,000, then you can decide to hold like just 5. You build to a minimum of 1,000 shares on each, depending on dividend. We have seen that slide for dividend. Let me go to it. This one. You only need, like for BAT, you can build it to say 100 shares. That is a dividend of around 6,000 based on the current. Stanchart, again 1,000. Stanbic, maybe 2,000. So it all depends on the dividend you want. So don't hold too many shares if you're investing small amount. If let's say you're investing every month 100,000, then you can as well accumulate all these stocks. Why? Remember, these dividends, first of all, they are not guaranteed, even if last year they paid. So you want to invest in different stocks so that in case one is shocked, another one supports you. So 100,000, you can have most of the dividend stocks. There are people who own everything. But again, you don't want to have everything in your stock. You also need to do analysis and see how that stock is performing. So it all depends on the amount that you're investing. If it is small amount, just have small number of shares. If you're investing 100 every month, then you better hold one stock until you build it to a minimum of 1,000. But now depends with what you're looking for. If it is capital gains, then you need a lot of shares. If it is dividend, the same thing. I think that was a casting. Can you share link to the chat group where? As well as a YouTube channel. I think it was shared somewhere down, but I'll come to that. Is price to book ratio a good instrument to analyze undervalued stocks or overvalued stocks? Yes, it is. But again, look at the way companies report in Kenya. You fight because of accounting adjustment, it may never give you the correct figures. You can use that or price to earnings to growth ratio, PEG. It also gives you valuation, or you can even use dividend yield. It all depends on what you want to achieve. But again, in NSE, undervalued stocks doesn't mean they will rise in price. You have to also check what the companies are doing and why the price is down. You also compare with peers like Absa and Co-op, they go together. Equity and KCB, they go together, the prices. I think the links have been shared. Thank you. Thank you, CK. Then we come to the other question. With the changes for Kengen, what kind of changes and how are they likely to affect the stock? For Kengen, they want to split the board so that they have an independent board, which is not controlled by the government, which then means independent decisions, meaning even dividends, they might change. They might even start giving high dividends. Also, you may notice price volatility, because then it means even in terms of investment, they can limit who owns what. Meaning they can even say NSSF who should own up to this portion, they cede the rest to the market to increase liquidity, or even decide to give rights issue. That can only be done if there is an independent board. Once that is approved, the prices will just go up, because now the shares will be available for trading. Is it possible to lose all your money a company fails? First of all, you can't lose all your money in NSE. If the share price goes down, it is suspended, like what Mumias have been done. But the downside of that is that you can't sell those shares or buy. But you can never lose your investment to zero. It means that company is being liquidated off the market. That I don't think can happen in NSE where you're losing all your money. And remember losses, you have to initiate it by initiating a sale order. That is the only time you can lose money. In terms of the topic, we were dealing with how to build a portfolio. So next week, now I should be able now to show you how you allocate your investment. I should be answering that question. How many stocks should you have? With these basics, then we should be able now to break it down. Dennis, put the question on the chat. There is a place I read about Centum buying back their shares from the market. What does that mean to us as a shareholder? Mostly it's a buyout where you as a shareholders, you are bought out. You are paid back your money. They take back the shares. Mostly it happens where a company is acquiring another. So when a company is acquiring another, it comes and buys out the shareholders. You are paid back your money at that price that will be announced. That price may be determined by the person who is leading the transaction. Expound more on what you said about Kenyan and board changes. I think these have highlighted. Hopefully it materializes. And as I always say, always look at business data. Kenya Wall Street, that's when you want rumors which are not verified. Rumors which are not verified. Business data, rumors that are verified. So you come from Kenya Wall Street with a rumor, you go to business data and confirm it. Don't go to any other news outlet. Most of the others, they are more of politics. That is for NSE. You get the rumor from Kenya Wall Street. They usually do it at night. Very early in the morning before market opens, confirm that rumor with business data. You don't have to have a paid account with business data or buy the newspaper. What's your take on Liberty after they issued a profit warning? Profit warning means they are announcing either a reduction in their prices, which may lower the dividend, or they may not give dividend, or if they were in losses, the losses will go up by 25%. That is done to make sure the market is not shocked. Remember, if they were to announce a reduction in dividend, most people will come and flood the market. They want to sell. But when they give that in advance, when they are making their financial results, the market is already ready for that. With the previous week market bleed, do you think it will continue longer? I'm looking BAT going further down. Do you think it is possible? Just use GTD, but don't try to go very low in prices. And I think you have known what happened now. It is KPC results have to be announced. Those results were supposed to shock the market, but instead of shocking the market, you make sure the market is already shocked by making sure all the shares prices go down. As you struggle to understand what is happening, the news are released, and after that, market goes back to where it was. You see BAT starting to go up. It is come dividend, unless people start selling. These days, we are seeing the opposite of what you used to see before, where the shares come dividend, prices are going up. When it closes books, instead of going down, it goes up. But I think it is the people who are getting in the market. They're coming without the knowledge about the market. They push the prices down. Escom controlled prices. Does it have something to do with government selling? Yes. And very good, Pauline, for highlighting that. It was 44. Right now it's supposed to be in 70s with Akina Equity. But now they have to control. But now it is a good time to accumulate the stocks. On NSE site, how can I check my portfolio for a past day? That you have to do off the system. The easiest is to use stockanalysis.com and always download those reports. Or you download from a broker platform on each day. Otherwise, there is no way you can backdate. The reason why we have limited that, you might backdate, you forget to change the date and you think you are still in profit. Because portfolio is supposed to be given in real-time prices. Recommend number of stocks a portfolio should hold. It all depends with the amount. If it is anything below 5,000 per month, then just up to stocks, you build them to substantial number of shares. If you are doing 10,000, do 3, 4. Don't try to squeeze your cash by spreading it into so many stocks. But if you have substantial amount of money you're investing, diversify as possible, as much as you can. But coming to your training, now you do portfolio selection. It's only that I underestimated the time. Because if I did interactive broker, we would have taken another, say 1 hour. But I will try at the end to see if I can still access. But next week now you come select the shares, allocate stocks. Because by that time you also have international stocks. What market cycles exist in Kenya? We used to have election cycles where every election would affect the market, but brokers went digital, so elections no longer affect the market. So we have now the results cycle where companies are announcing results. If they're announcing good results, market goes up. If they're announcing bad results, market goes down. Then we have dividend cycles, companies that give dividend frequently. You find when they are giving, market is up. When they are not giving, it's down. Then we have, I would call it political cycle, more of market interference, where a news is being announced in NSE. You see prices shake. Then we have now the economic cycle. This is where now tax measures come in that affect the market. So in terms of identifying them, you can always tell when government is making announcements, you just need to relate that with the market. Like I've given you Safaricom sale. How is it affecting market? You can see it's already capping the prices. And you only need to check on negative news. Negative news means market will go down. Buy low, sell high. I think we have seen the market in 2004. There was it was after COVID. Most companies had been affected, but then government introduced the tax bill 2024. Then on 2025, the same thing. That's the one that floored the market. Prices went way down. But what happened after Gen Z's? Market have started to stabilize. Then we have stocks being added to MSCI feeder index. For those who are on my WhatsApp channel, I'll keep on updating you each and every time a stock is added. Like now, APSA is a hot cake. I know more will be added. When they added in that index, remember fund managers who use that index to track the market have to invest in it. And it means you have a buy order. You have a demand exceeding supply, prices going up. That is the time now you buy. When is the Safaricom sale to Vodacom transaction to be completed? They got a nod from COMESA. I believe those news should be out. If they are not out, check on Business Daily. That is the only thing that was standing in between, because COMESA is in Uganda, Tanzania already through Vodafone. And I think Uganda, they also have some ownership. So they needed that clearance, which have been done. We are now waiting for competition authority, which is straightforward because it is government. CMA to give go ahead, which is government. That transaction might be announced in the middle of trading, where you'll just see the share price just shoot up. Or at night, you just wake up, Safaricom price you can't be able to buy. That's why I'm insisting buy early when opportunity is there. I doubt if ZD Trader has this GTD thing. Do I give you that story or not? Or we call it day to day for ZD. ZD doesn't save orders. Huh? For a GTD, it means that order has been saved somewhere. As I said, NSE cannot allow orders to be saved on their platform. Why? That is a platform initiated order which is against their own trading rules. ZD, the way it connects directly to NSE. It has a broker. And even others are being onboarded. AIB actually was supposed to be the one launching. So AIB and Kestrel, not Kestrel, AIB and Renaissance Capital. The person who bought Kestrel moved from Renaissance Capital. I think he may have hijacked the process, which is okay. It's good for the market. But what they launched was actually half-baked because we had not even completed the development. And that's why it misses ZD, the GTD thing. We wanted them to even give you functionality where you're able to save the order. Broker submits on your behalf, but you can still see it on the ZD. Now, the risky side of it is that when you submit the order with ZD, it goes to the market. If it doesn't execute, it is cancelled. It means the following day you have to come and place the order again. You can't place order over the weekend. So like now, tomorrow, we may expect the market to stabilize. If you wanted to buy at lower prices, you may need to put as a GTD order. In ZD, you can't do. Hopefully, they will realize some of these rules gaps and improve on ZD. But they don't do what they did with Mari. You all know the story of Mari. Mari was a product between Safaricom and Gegis Capital. They made Gegis Capital take a very huge role to cater for the funds. Then eventually they left Gegis Capital and moved straight to ZD with another broker. I think it is SIB. Now they have added share trading on ZD. If anything happens, what will happen? You know, we have to look at some of these things in terms of investor protection. In ZD, it is Safaricom which is protected by CMA. You are protected by a contract you have signed with M-Pesa. But that does not mean you can't buy shares. You can buy, you can even build wealth with ZD. But let me ask you a question. Have you added beneficiaries on your ZD account? If you're not there, how would they claim those shares? It is different from a broker-owned account. For broker-owned account, they only need letters of administration. Come with the court letters, shares are transferred to them. What about ZD? ZD is a single account holding shares on your behalf. ZD themselves, the Safaricom, they can even be used by government to control prices these days. If they sell your shares, you not know. How will you know they have sold your shares? You can see them, but in the market, in CDSE, remember the shares are not under your CDSE. They can sell and buy back. So these are things you see in the market. But anyway, it is NSE. We come to AMCA stock. This one, I may not be able to tell you, but this is more of a speculative stock. Let's see what they announces this time in terms of results. And if you have any question, put at the chat. I'm just scrolling through. Okay, now government causing a shock and before people are aware. Yes. Remember these KPC IPO results. If you look at them, they knew we would know the government owns 95%. They also had said Uganda are not investing. Now they have allowed them. You see, instead of now shocking the market, they first shock the prices. Before you concentrate on prices, they have released the results. Everything goes back to normal. Shares will be loaded to your account. They spike the market a bit. You are happy that day the prices maybe go up, but before you know it, price slams down. But if the price goes down, that time accumulate as much as you can. And when you buy, don't sell. When they are taking advantage, also you take advantage, because there will not be many shares for trading. Just hold on to them. When prices go up, take profit. How can one notice that the market is being manipulated and avoid being swayed? First of all, check on temporary news that are shocking the market. When prices drop, check if something is happening in the market. The first thing, first check NSSF, are they exiting? No. Have the government announced anything? No. Have NSC announced anything? Have CMA announced anything? Because those are the things that shock the market, which are temporary. At that time, you find most of stocks, maybe they are losing and there is one that is not losing. So that way you know the market is being manipulated to drop the prices. If it is share price and it never goes above a certain price, always check whether there is a certain order that never clears. If there is a huge order that never clears, just check yourself. Why is this price still there? Why is this order still there? Why is the market not able to break that price? Is there anything happening in that company? Like now what is happening with Safaricom? Ideally, anywhere government touches a listed company, always know price control will be there. Please talk about Toto Kenya. Toto Kenya may be affected because of what is happening in Iran, but again, remember even the stock they have here, they will even push the prices up and they blame Iran war. But it is profit to them. They might give a good dividend. But again, if that war drags for a very long time, they may be affected. Please talk about international markets and onboarding. Let me check whether I can get into that interactive broker. It is still not able to open, but I will do now a full session on international markets. However, if you wanted to open account, you can always reach out. I can help you open. It's not a lengthy process. Let me check if I don't think I can do through. Let me complete Q&A. I connect my data, my mobile data. Hopefully, I have data on my phone. I connect the data, then we can go briefly through the process, so that for those who came for NSE, we can allow them to drop. Peter, what do you think about sustainability of BAT dividend when they are giving out more dividend than the profits they make? For this one, they could be giving from their free cash flow from last year. So if a company is giving more dividend than what they have, it means either they have an asset that they have sold, or extra profit that they made, which was not reported. Maybe they underreported, or there is over-reporting in the market, or they are giving much of their carry forward, the balances in terms of cash that was that last year to this year. Maybe they have identified they make more profit. But BAT have been giving dividend for the longest. I don't think it will change. The only thing we may see is a drop maybe in near future. But unless we get somebody who controls cigarette smoking, I don't think BAT can be affected. Because then it means it has to affect even exports. Much of it is the export they do. But remember, once you become an addict of cigarette, you continue smoking. So that is the downside of the BAT. But that means as long as those people are buying, there is some money coming. Peter, I just got in late. Could you kindly talk about GLD? Best price to buy for short-term trading? For GLD, let me see if I can log in the interest of that question. Let me show you now how you can make quick money in NSC. Hopefully, it will work for you if you are patient. Remember, GTD works if you are patient. GTD works when you are patient, and that means for you to buy GLD stocks, you have to use GTD orders. I've connected. Let me share that screen. As we wait for that to load, I want to first thank those who bought soda. You know, it scared people after I opened that group. Thank you so much. It's well received. And that gives me even more motivation to do these trainings for free and even add more days into training so that at least you also learn. I'm waiting for this to load. GRD. It's the only stock and BAT that you can play with prices very well. I've said BAT, you can even do a 50 shilling difference in a day. So if you're looking for intraday, those are two stocks you can play around with, but you have to be careful. Let's start with BAT. Let it load. BAT, you can easily make quick gains, but also factor out commissions. When you're trading, commissions may eat into your profits. So it is loading. Let it load. Hopefully I don't refresh again. You can see on the ticker there is a price drop of 13 on Friday. That's just BAT alone. Huh? It's refreshing again. Hopefully I don't click. So for GRD, when you're buying, you use GTD order. That is, you give your order for some days, then you put a lower price. If you get, immediately you put a sale order now at high price again, GTD. Now that price difference is what makes profit. Hopefully it opens. Just refreshing. Let me just refresh. Let me just add it here. Hopefully GLD. Okay, it has loaded. Let me just cancel this. If we click on GLD, let's see if it loads the graph. There is this screen that is split into bid and offer, only that it doesn't have the prices. So you look at the lowest price on that screen. Then check the prices above it. You check whether they are achievable. So when you're placing the order, like now, if I pick GLD, where is it? It is here. You can see in one day, it did 6,600 and lowest around 6,100. If I do 1 month, it has been playing around that price from around 5,900 to around 6,000, say 200. So I can come and place a buy order, click buy. Now on the app, you go to watch list, you click GLD, you see the prices, you click buy, the screen is the same. Make sure you don't change the limit. You just put like just to buy 2 units. Price, you put the lowest that you can. You can decide I will buy at 5,900. Leave it as GTD, give it 1 week. Because price can fluctuate any time in between. Give it up to Friday. Then, very important, you may want to sell that gold the same day. Select intraday. For gold, I can allow you to put intraday. So that if it executes the same day, you can sell the same day. Then you click buy and confirm your buy order. It is sent to the market. So if market opens and price fluctuates, it goes to your price, you find your order have executed. Let me just find that screen for order status. It is here. If I refresh, I have my APSA gold. If it goes to the market and executes, I can come back and sell the same transaction because I bought it intraday. Let me first cancel this so that I don't make mistake. Let me just cancel the 2 orders. I'm just doing on the online portal, but if I get time over the week, we can do a live training where we execute a full trade This one I can leave, the one for 1 bob, just in case they make mistake tomorrow. Even this one for 3,000 I can leave, just in case they make mistake. So I only have 2 orders for ABSA. The other one I may have cancelled, yes. So I can come back after I get those shares, I can come and sell. Now this time, I sell at a high price. Huh? My 2 units which I bought, I put maybe a price of 7,000. So I've made, and I also changed to intraday GTD. Because I may also want to sell and buy back. Huh? Again, submit the sale. Confirm. If it executes, it means I've made a price difference of around 1,000 and something. That you can do even within 1 week if you're targeting good prices. Let's see. It's only that it can't show 1 week, but in a day you can see that price difference. 6,600, lowest 6,100. It's a difference of around 500. If you have 10 units, that's 5,000. Without struggling. Then the following day you repeat the same cycle. But remember, factor commissions. Huh? Commissions may end up eating into your profits. If you want to learn intraday, let me know on the group. We have a chat. I should do now a full training on GTI on intraday so that you understand how it works. Huh? You think KPC will pay dividends in the first year or which year? It should be in the first year. Their dividend policy says that, and they can't change because remember now we have Uganda coming in with 2 board members, which cannot influence the decision, which cannot be influenced by the government. I can see that ABSA Gold. I can see that ABSA Gold on my head. Just check whether there is a way you can. Sorry, I dropped. You can hear me? I want to switch my phone to my data. Just confirm you can hear me. You can just show with the hand. Oh, okay. I think my internet is playing up. I may need to swap to data. So let's see the other question. So for GLD, just take that code. It should be there. If it is not there, you can always add on the settings. Huh? Does SMWF accumulate dividend? No. ETFs in international markets, there are few that give dividends. Huh? For this one, it is a feeder ETF. It doesn't give dividend, even if the stocks inside it give dividend. Huh? It just reinvests. The other question is on, I'm not sure this question on IP, because I can see, why do you use, why do I use VPN? It's actually not to block the traffic. It's because my computer is connected to the office. Huh? So everything that links to the office, I have to use VPN on my laptop. Huh? But if I'm using my phone or my personal laptop, I don't need the VPN to connect to the online portal. It is publicly available on the internet. Huh? It's only on my laptop. So for accessing investor portal, you don't need any VPN. Eh? It's only on my side. Market cycle, I think that I answered. I opened IBKR account last year, but I have not funded it. Is it dormant? Just log in and check. You can always reactivate. Then a comment from Grace, thank you. If I don't cancel intraday position by 3 p.m., will there be penalty or any cost for failing to cancel? No. Brokers are only allowed you to charge any executed trade. If it is not executed, the system can cancel, or you can cancel without any penalty. There is no penalty of cancelling any order. If a broker charges you to cancel the order, you have the CMA. They should reimburse that money, plus any losses incurred. So brokers, they don't charge you to cancel the order. You can cancel any moment. Is it possible for GTD to be executed within the same day? Can you cite some example when this can happen? Yes, it can be executed the same day. Let me give you a good example. I wish that screen is loaded, the market depth. Let's say you put GRD to buy at 5,000. There is only one order above you to buy at 6,000. Somebody submits a sell order on market to sell 2 units. It will clear both of you, but remember your order was GTD. The reason why you put GTD is because you don't, first of all, you don't want to refresh that order every day. Number 2, there is a possibility either the same day you get the shares. If you don't get, then the following day or within the duration that you have put the order. That's why you need to check the direction of the market before you place GTD. If it is going down, put low prices. If market is going up, put the first 2 prices. You can even get the same day. Not even the same day, even that time you are submitting. Maybe your price is the next one. Help on how to fund my account IBKR. You can reach out on WhatsApp because it may need we go through. I wish I could have connected mine, but let me finish Q&A. If we still have time, I would just go through the whole process. For the account, you can always reactivate. There is also a recommendation there. Cost-effective ways to use a USD account with a Stanchart or INM. You try as much as you can to minimize the conversion. There are banks which charge you to convert, and also now the transfer fee. But now if you have converted already to USD, you can submit. Top counters to invest in NSC tomorrow morning. First of all, Safaricom. You don't leave it. As many as you can. Then ABSA, BAT, try lower prices. Then for banks, just watch the direction the market takes before you get in. Is intrinsic value a measure of a stock real value? Intrinsic value is the value of the company, while stock real value, it could be you are talking about the price at NSE. Those are 2 different prices. The price at NSE is the trading price, but the company have it is a stock value. That's why you hear people saying this stock is at a value, because the trading price is lower than its true value. But remember, its true value also includes the shares that are not trading. That's why some of these terminologies, they work in theory, but in NSE they don't work. It's purely demand and supply. Yeah, if you have a USD account with Stanchart, you are sending those funds to IBKR account. You only need to quote your account number. They usually give you the reference number, the bank to send to, you initiate the transfer. If you capture the details correctly the following day, you should have credit in your account and start trading. The issue is usually on account opening. Transfer is easy. Account opening because of proof of address. And also choice of the account. That's why I'd want to connect. Hopefully, I managed to connect the data. Which counter are we likely to see doubling of shares? Doubling in terms of, because in terms of doubling, maybe unless they are giving bonuses. In NSE now you start seeing bonus shares and also splits, because those prices are way high. Most of the companies may want to lower their prices. Baburi, I think it was bought out, so it's no longer trading at NSE. If I have like 10K bought shares in intraday trade, then it executed full, do I need to wait for 3 days for the shares to reflect in my account before I sell? First of all, if you are doing intraday, you can sell the same day. What you can't do is selling the following day. If you buy today at the intraday, you can sell at the intraday. But you can't sell tomorrow. After today, they convert back to T+3. You can only sell after settlement. Alternatively, if I successfully sell shares worth 10,000 on intraday trade, do I need to wait for 3 days for the money to reflect in my account before I can be able to do another buy order, assuming my account balance was 0 before sell? For the sell transactions, it doesn't check whether it is intraday or delivery. Immediately you sell, you get a credit. You can buy back. It's only a payment that you can't receive the same day if you're withdrawing. But if it is buying shares, irrespective of the mode, you can always buy more shares. It's only on the buy side where it is only intraday that allows you to buy and sell. I bought upside that 150. How much do you think the price will gain after MSCI listing? It will depend on demand, but the price will go up. You have seen Akina CIC moving from 3 to 5. So would now be a good time to buy Eskom counter before Vodacom buys government stake, with the possibility of the share price going up to 50 later on? Gotten from your previous answer that this is the time to buy. Yes, and if you can get lower price than 30, the better. Try 29, 28. Tomorrow it might go lower. Try to get that price. What is your take on placing GTD order between 9 and 9:30 versus after market opens at 9:30? Would there be a cost difference? Yes. Remember, between 9 and 9:30, orders are just being pumped in the market. You find prices are jabbled up. If you're not careful, you might place an order at a higher price. The easiest is to place not even after 9:30, because 9:30 to 11, that's when market clears market orders and any other overpriced orders. After 11 to 3, the way to the next day 9, that time you can place GTD orders because you are within the price limits and you can see the direction of the market. So basically, placing orders for GTD, always try to do from 11 all the way to the following working day 9. After that, just watch the prices, check the orders the way they are being placed, unless you are placing a very low price when buying or a very high price when selling. That's the only time you can put any other time. Now that we have a WhatsApp community, is there any difference with Discord in terms of information? There is no difference, only that now Discord allows more people in without creating subgroups. WhatsApp now it is open. I think in a few days it might full, so I may need to create another group. But remember, your number is visible. The reason why I opened Discord, first of all, we are getting into international markets, which will also attract other foreign clients. I wouldn't like them to come to WhatsApp group because of phone numbers. That was my worry, but I think you have the flexibility of either. Please advise on ABSA entry points. ABSA, I think currently it's around 30.50, a price of 30. If it goes up tomorrow, the 30.50 or lower. You can use GTD. My grandma passed and she owned EABL shares. Her next of kin also passed. How can I be able to get those shares? You just go to quotes. First go to your DC to confirm you actually from that family. Depending on number of shares, they will either give you the documents to go take to the broker, or send you to the court to get that succession process. It's not lengthy as long as you can prove. You only need to prove you're actually a member of that family. So go to DC. DC will direct whether it is court or him to give you that document. How do you check whether KPC shares have been allotted to you? If someone applied through ZD and doesn't have a CDSC account, it will be there in your portfolio. You see, when you buy shares with ZD where they reflect, that's where you see. But apparently it would be a manual process. That's why they have delayed with another 1 day to give the team time to allocate. Hopefully they don't make mistakes. Bought KPLC at an average of 5 bob and Safaricom at 20 respectively. Should I buy more? As all indicators show, these counters are still undervalued. For Safaricom, yes, you can add, because you're only adding 8 bob as a difference. For KPLC, it will depend on the number of shares, because then you'll be pushing your average cost up. You only need to know that you're pushing your average cost up, but you can still add. Nothing stops you from buying more. Is it viable to buy APSA at 30 to 31? Yes, but if you can target a lower price, the better using GTD. But now when it starts to go up, then you might be subjected to the current price. Talk about Crown Paints. For this stock, I think even the name dictates what they do, and I think they already have competitors. Their competition in the market may not allow them to make that huge profit to keep on giving good dividend. It is a good stock if you're also willing to chase prices in a speculative way. These are more of a speculative stock than holding stock. Is it viable to buy NCBA shares before Nedbank buys it? I think for this one, I hinted something. You need to check their dividend policy if it will change. If it doesn't change, then you can buy, because there is that rumor that anybody with less shares might be paid at 105. So that may push the market price towards that direction. But we are seeing the price going down, because again, every news that is coming out looks like it is negative. Why is nobody talking about withdrawals nowadays? Withdrawals in terms of when you sell. I've already done a video, maybe I can also train next time. But when you sell shares, you can request to be paid. But remember, you are tied to T+3. You get your money on the 4th working day, unless you want to withdraw early. Now, the reason why you may not see people talking about it, most people are buying shares rather than selling. Well, I feel like in Kenya alone, everyone is talking something different from the other. Total confusion. Maybe you can clarify on that. There is the change at the top management of at BAT. MD, CFO have exited. Their head of legal and compliance left last year. Any concern for Aram here? Nothing to be alarmed about. CMA would have requested them to announce any cautionary information. I think this is just part of, maybe they are going on retire. Their contracts could have ended. But remember, when you are leaving, there is always a replacement immediately. So I don't think these should be causing any harm, because they reported profits. I think there is also that rumor that it could be the issue with reporting. I don't think that is related at all. Which is the best counter between APSA and Co-op? APSA. The reason is Co-op already is added on that index. So foreigners have already bought. APSA was just added the other day. Intraday is where you buy and sell the same day. But then what the brokers do, they calculate the commission. The side with a lower commission, they don't charge you. So you only pay one side. And it has to be intraday, both buy and sell. Which broker would you recommend for a beginner? I wouldn't want to market any broker, but I work with the IB Access. Let me just say that. I'm keen for intraday trading. Yeah, coming next. Just watch out on my channel. I will try and see if I can fix it within working days so that we do it practically. I personally want to trade intraday to grab the market opportunities. This is a good opportunity. Just play around with gold and BAT and the other stocks that trade above 100. Because most of them, they usually do even a 4 shilling change move. That means you either need a lot of money or you need to be patient because of GLD. What about Williamson T? Williamson T, Capture, they are already discounted. They gave a bonus last year which lowered the price through bonus dilution because the people who bought shares after bonus closed, they were not entitled. So the prices went down by half. Both Williamson and Capture. They are good stocks to buy. But however, check the impact of their operations on Iran war. Because I know that is might push prices down. So you may want to take advantage of that and buy at lower prices. If I place a buy order successfully at intraday trade basis, what happens by 3 p.m. if I have not placed a sale order? It just converts to normal settlement. You are not entitled to the commission rebate because there is no counter trade to confirm which side have a lower commission. It will just convert to a normal settlement. Because on Capture T prices are going up, but Williamson T is going down, and they are possibly same company. Remember, I think Williamson T, they may have announced a profit warning. That's the reason. At what cost can one buy Safaricom now? 29.28. Use GTD. What are the requirements of opening a Chama account? There is a form that you need to fill in. Chama to be registered, you have minutes, then you fill in CDSC account opening form. That process is manual. If you need the forms, you can reach out on my WhatsApp number. I think I've shared that number. It is there on the screen. Can I make an order on weekends through the app? Yes, AIB Access, AIB Digitrader, and I think other broker platforms, they allow you. Only ZD that you are not able to do it. And remember to change GTD to day to GTD so that you give some days. What should be the GTD for Kengen? Kengen, unless you are targeting a price of 9, which could be unlikely, you can target 9 then within the next 1 week. Can you show again the presentation you showed for dividends and share price? Again, could it be this slide? Let me see. Though I will share these slides, don't worry. I believe it is that on dividends. To confirm, you have advised that the best way to buy shares is using limit and set the highest price available and set GTD as a validity period, right? Not price is not the highest. The others, they are correct. Limit, price, if the share price is going down, you use the lowest on the bid side. If the prices are going up, you use the top bid or the second bid. If it is going down, obviously the prices are going down. So you want to buy at the lowest price. So you put the lowest price on the bid side with GTD. Then validity period, give it 1 week. Between KCB and equity, which one should a new investor go for? I would advise on equity if you are looking for long term, because equity usually does share split. KCB, unless you are looking to get dividends early. Remember, equity will pay dividend this month. Between now and April, they will not give another one. Huh? KCB, they had given an interim. Huh? And also, should one buy, say, KCB now or after 11th when they announce their financials? If you wait for financials, prices will go up. Huh? If you wanted to buy now using GTD. Lower price. Let's wait and see, because the market had dropped. Tomorrow market might open with different prices. So that is on KCB. What about Sasinity? They have a good dividend, if I'm not wrong. They usually give dividend. Unless they stopped. Let me see in this list. It looks like they stopped Sasini. That one, unless right now you are chasing prices. That one, unless you are chasing prices, which is tricky. Did I miss anything on international markets? Not yet. I want to see if I can complete Q&A. Let me see how many questions are remaining. Oh, there are few. When you look at my watch lists on the foreign buy and sell column, are those figures the executed trades for the past close day, or it includes even pending orders by the time the market closed? That is for the orders that executed the previous day. For foreigners, you never have GTD orders. Huh? They don't do that. Them, it is day orders. Huh? So what you can see is what executed. Can you comment on INM Bank? Is it a growth or is it a buy? INM is a growth stock in terms of even price. They expand a lot. Huh? And it is one of the stocks that in the bank is also undervalued and gives good dividend. Huh? So you can buy, but again also target lower prices. Huh? What do you mean 3 plus 1? I said T plus 3, where it is trade day, then you add 3 working days. So your shares are only available for sale the following day. If it is the payment, if you sell today, you add 3 working days, you get your money on 4th day. Why? Because CDSC, they move money to the broker on the 4th working day. The broker doesn't have your money. That's why AIB charges you an upfront fee if you want a repayment, because they have not received the money from CDSC. That is by regulations. Huh? So once you sell, credit is put in your account. You can initiate withdraw that day, but you'll get on settlement day. Now to M-Pesa or to bank, depending on what you select. Huh? Remember, when opening account, you gave these details. If it is bank account, you give. That's what we usually pay to. Will you upload the session on YouTube? Yes, actually tonight. Toto Kenya, I think in terms of the war, it might be affected. Maybe the prices, the profits may go up because they can revalue the existing stock, which means getting more profit. Talk about Satric stock, that is the ETF SMWF. Unless you're investing a lot of money, I wouldn't advise you invest on that, because then price movement is limited. It is similar to buying BAT. Sasinity, I wouldn't advise on buying Sasini. Just go to stable dividend stocks. Huh? What is the advantage of a broker you are using? Yeah. AIB most of the time is usually ahead in terms of innovations. Huh? Just look at all products, apps, and portals in the industry. You compare with AIB. You notice AIB, they are a bit far ahead. Huh? But you may also want to evaluate other brokers. Huh? So don't go with my word. Also check other brokers, but also commission. We have lowered our commissions. Still on the foreign buy and sales column, when the market is open, do these two columns show a combination of pending and executed orders or just executed? It is executed. That only shows executed trades. It doesn't show any other orders. So what you are seeing there is not pending order. Pending orders, you see them on the order book or market depth. The screen that is split into two, that's where you see the pending orders. Even for foreigners. But in terms of those columns, it is the executed orders. What they have already bought and what they have sold. I want to load my phone some data. Let's see if I have some M-Pesa we buy quickly. We go to interactive broker. Let me see if it allows, because I would have to do it. I know my internet provider usually broke some sites, but I will check with them. Let me just switch. I'm not dropping, I'm just switching. Let me just switch. For shares, your next of kin may need to come with the quote letters, but it is necessary to have them just to protect your investment. Would you advise somebody buying Kakuzi? Kakuzi, does it give dividends? Last year, Kakuzi. It didn't. It is not in my list. Oh, it is there, 8 bob. Yes, you can buy for dividend. The reason is Kakuzi is held by people who are in retirement. So if you are buying, also buy for long term. Can I have more than one broker? Yes. CDSC number is the same, only that now you have shares spread through multiple brokers. What do you mean AIB has lowered commission? While others are charging 1.64, we are charging 1.3 irrespective of trade. I know there is also 1.78 for anything below 100,000. AIB is 1.3. Unless you opened your account through manual forms. But everything these days, as long as you're trading online, commission is 1.3. That's why you saw ZD trying to market using AIB, saying they are even cheaper than AIB. Can I have more than one CDS accounts? Maybe one with ID, the other one with passport. You can only have 2 accounts. What is likely to be state of KQ shares this week? I think even KQ, I saw Honorable Mbadi say they might also be changing the board, and I think they have already announced, and also doing some restructuring. The price may go up if it creates excitement, or the price may go down. Let's wait and see tomorrow. How do someone change from one broker to another? You first go to the broker you want to move to, open a CDSC account. It is the same number. You go back to your original broker, request them transfer form. They fill in. Very important, they stamp your form and also your ID. That means they have seen you. Send that form to the receiving broker, the new broker. Then pay 200 directly to CDSC, 200 shillings to facilitate the transfer. After that, you just wait for the magic. You see it in your portfolio valuation in the other broker. If one buys BAT shares now, will they get upcoming dividend? Yes, dividend, I think Bukrosha is way much ahead. You can buy and continue buying. If you have, hold. If you don't have, start buying now. Only after if you buy after book closure, that is the time you won't qualify for dividend. Let's now go to IBKR. That's my WhatsApp number for those who may want to reach out. We still have some time. Let me see if it will open on my data. Interactive brokers. Let me stop sharing. I share this screen. Na I'm not sure kama mmechoka. Mmechoka to we call it a day. Maybe you can tell me on the chat. Don't raise the hand because I want to see the number of people who are. Kuna mtu amesema yes, we go home. Naona kuna mtu amesema yes. Ni hivyo, ni hivyo. So zimetosha. There's something I'm doing just to lower the hard so that I'm able to see, because I don't want people to lose. If you have raised the hard, just lower. That's fine. So zimetosha. Lower the hard. Okay. Let me share that screen. Na hapa sasa mtanunua nyama. Hapa to agree, tunanunua nyama. We open account, then if I have some time, we log in. It's my internet provider who is blocking. So let's start from the start. Let me close this. You search for interactive broker. You don't need to do it alongside me. Just watch the process. I'll share this recording. So you click on the page. It opens this screen. Make sure it has that logo of interactive broker. So you click open account. Then you click start application. Again, open the website. Let me make sure we are together. And to me agree we are buying nyama. Let's see. So let's continue. So we are on this site, interactive broker. Use the online portal. Mobile app itakusumbua. Mobile app, you have a lot of hard time. You click on open account, start application. It takes you to this page. This is where it's very important. On the left side, where there is open an account, you create user and password, confirm your email address and phone number, complete application. There are two types, individual, institution. If you're opening as individual, you need personal details and contact details and proof of each. Income and tax information, that one you don't need to worry. Trading experience objective, that one you don't need to worry. And funding details, how you deposit money. Institutions, you can open for a company, but again, you also need those details. Let's do for an individual. We create a username. Here I can use, I hope this email address is not taken. gmail.com. There's your username. I can use the same. This is just a dummy account. Hopefully I've not used this account. Peter access. It is available. Then I can use a password. I think this is already taken. Hopefully I have not used this email. Then a password. I can use a strong password. Use strong password. Then country. You select the country you are creating account. Your residence. Even if you're outside the country, I would prefer you use Kenya, but nothing stops you from selecting the country you are in. But remember, you may be subjected to provide details based on that country. Click create account. Hopefully that email is not taken. Close that. So it is asking me to check for my email address to confirm. So the first thing is to log into that email address. Let me just go to log that email address. You won't be able to see it here. Let me just log into the Gmail. There is an email that should be coming from IBKR. That's why I said it is a very simple process. Let me see if I can. On the email that you receive, Let me stop sharing this. I share the email. I'm sharing the email so that you can see what you receive. So the email looks like that. Action required, complete your application, dear IBKR. You just now need to click there. It is asking me to log in. I can copy these details. Let me stop sharing. I go to the other, because I'm using two different profiles. Where is this? Here. So I can paste that here. It should ask me to log in. I'm just not logging in as that. That is a different account. The access. Hopefully the password was saved. Let me see my username. Okay, I've seen I made a mistake on the email. Let me change the email address. Allow me to change the email address. I use the correct one. Use this. I'm just changing my email so that the application goes through. I'm just changing the email address. So don't worry. Control paste, save. I'm sharing the screen once I'm done. It's done. So here I can share the screen and share the screen again. So I've just changed my email address and I need to confirm this. So if I click confirm, it will set the instructions. So I go to that email address. Email. Because you need to confirm your email so that they know it is you who is accessing the account. So I will click on confirm email. It should ask me to log in. And you get a confirmation. Let me see if I can drag this. And there are those who are concerned about AIB access in international stocks. Let me clarify a point here. AIB access have not yet fully integrated. So I don't think we need to wait for them to integrate. Trying to connect this here. Let me see. So you get a message confirmation that the email is confirmed. And as you can see, that message is got on top where I was supposed to confirm the email. Now, the most important is selection of the account. Selection of the account. Confirm you can hear me. And you can see the IBKR account. Maybe it's not visible. Just confirm. Can you hear? So we continue. Okay. So here, the very important point is the account type. You have all these accounts all the way down, but we are only interested in individual account owned by one person. You can even open joint account if you want. You can open trust account if you want to shares to be held in another name, advisory, all these. But we are interested in individual account. You select the first option. Then you scroll down, you click Start Application. So you wait for it to load. It may also depend on internet speed. So with this, now we are on IBKR application process. This is the most important step from here to the end. You need to add details about you. They should match your ID or your passport if you're using your passport. There is the regulatory part, there is account setup, and then the status. We'll go them through quickly. I think we can extend, even if time comes, we can extend to, let me add more data so that I'm not cut in between. So you start with the title. Title is who you are, Mr., Miss, Mrs., Doctor, depending on what you want to select. Me, I can use Mr. Then names as they are in your ID. Make sure they are the way they are in your ID. I can just use for demonstration purposes. If you have two names, capture just those where they are mandatory. If you have three names, the same. If you have more than three names, first name, you check, you put your first name, then middle names, you put the other two names, then the last name is your surname. Now, address is the most important. You make sure this address is the one that is captured in your document that you'll be submitting. We said what? We are using our KRA PIN. You can edit the date, or you can use your ID if you're able to edit the date. If it is bank statement, let it have that date. If you don't have any of those, you can always get maybe something written and stamped by a government entity, or even your hard road if you pay bills. Anything that can show it is confirming the address, it has your address. Like for mine, I can use just what is in my KRA PIN. I have seen there is a Kangema. Line 2, I can leave it. City, I can use Muranga. Then state or province there. Then zip code. It has to be within, in the KRA, you have that number there. If it is not there, in the document that you are using, make sure it can be shown. Like 0100, you make sure it is there. The rest, just leave as they are. I have a different mailing address, don't tick. I have a different citizenship, don't tick. I was born outside Kenya, don't tick. You come to mobile number. You select the number that will receive SMS, because it will said SMS. Yeah, I can use, let me see if I can use my other number. I know this other number. Let me see, 0717 446 573. Because it will require you validate your number. Then you come and choose date of birth, personal details, month, whichever month you are born, and it has to be exact. Date, maybe 5th, year, 1976. But these are dummy details. Put correct details. Status, marital status, you can put. Dependents. If you are single, then you can put 0, 1, because you also have parents. Then tax identification number, your KRA PIN, the way it is. Let me just use a dummy here. But it has to be the correct tax number. If you don't have, then you can untick. But remember, most of us usually have. Then identification. These are where you select the document, either ID or passport. If you have a passport from any other country, you can select. Then you choose the type. You can use any of these, but make sure they have your date of birth. That is the year you are born, and the names. Year you are born and the names. So you can use maybe national identity. Then you put your ID number. Let me just use, I'm just using dummy number. If it is a passport, remember it has expiry date you have to put. If it is ID, then you leave it no, unless it is a new generation IDs. For employment, this is the most important. If you select employed, it will ask you for employer details. You might be required to prove the employment details. It is easier if you select unemployed. It has no effect. Just select unemployed. Source of wealth. You can untick because you have selected unemployed. You can tick either interests on dividend, maybe properties and real investment. You can also leave income from employment. Then account, just leave base currency as US dollars. Security question, very important. This is what you can use to recover your account. So you pick the first question, city, maybe Nairobi. And you take a screenshot of this or you save somewhere, these questions. Maybe city where you are married. You can put maybe Mombasa. Then the last question, visited, as long as you can remember these, Nakuru, and they have to be different answers. Take a screenshot of those questions because you need them if you need to access your account. Click continue. You have finished about you. The next step is the regulatory. And notice the number at the top. Always note the number at the top. It will ask you to enter the code sent to your mobile number. That's why you need to have a correct mobile number. Remember, you can't log into IBKR without that mobile number. So if you're giving a mobile number, make sure it is a number that you own and you can have access to. So I want to put that number 34944. It is unique to everyone. So don't put my number, it won't go through. So the number also is confirmed. Remember now, email and number, they are confirmed. So the next step is to move to the regulatory. So we wait for it. So regulatory information, they are just simple questions. First of all, account type. This is where we make mistake. Margin means you're trading with credit. Never trade with a broker with credit. This is where they make money from. And you can see they have made it as the most common. Don't even try to select that. Select on the drop down, select cash. Let me explain this. Cash is where you have to fund to buy shares. Margin is where you buy without cash, but you pay later, but then it means you have to be charged interest. Portfolio margin is where you can trade with shares which you don't have. Again, interest. So select cash. Don't pay additional fees. Then in the terms of net worth, here just pick any figure, but above, maybe pick for 40,000 for 45,000. The same thing here, 20 to 50. Then liquid, because this is a questionnaire that will allow you to go to the next step. Then the first, investment objective and trading purposes. Select preservation of capital and income generation and growth. Forget about the others. Don't select hedging. Don't select profit from active trading or speculation, because you are increasing the risk level. Then trading experience. Stock trading, put over 10 years, even if you are just beginning. Have 100 trades. Knowledge, put good knowledge. These are just questionnaires that will determine whether you go to the next step. You don't want to lock yourself. Options, don't select. Leave it as unticked. You're not interested in option trading. Then forecast and event contract, that one you can leave. Then you come to regulatory information. Are you or anyone else you plan on adding to account employees of publicly traded company? No, you are not in any of the company. You are not an employee. Then the second one, do you or anyone else plan on adding your account control a publicly traded company? No. Are you or anyone of the immediate family member or registered with a broker, dealer, investment advisory, future commissions, merchant, hedge funds? All those, just leave no. Then how did you hear us? You can just type TikTok or Facebook. Just select any. Then click continue. So you are done with the regulatory. So we are waiting for it to load. It is a very simple process. Now you are in tax. confirmation. Just details, you confirm those details are correct. You come to where there is treaty benefit qualification. You select I don't qualify for US treaty. So you select the second one. Let me zoom it out. Here you select the second one. I don't qualify because Kenya doesn't have. If you look for Kenya here, it is not there. Kenya is not there. So that's why I'm selecting no. I don't have. So I don't have a treaty. Then certification, you can just read through, but come and on the last part, you click yes, I agree to the penalties and consent to correction and distribution of tax form. That click yes. Then signature, you use the name that is there. They have given you the signature that you are signing up with. It is there, accepted signature. So you type it the way it is. If it is small letters, you type small letters. Like mine is that name, Peter M. Chege. You just type, then you click continue. And we are in our account setup. Stock yield enhancement, don't tick anything, click continue. Account add-ons, don't tick, leave it. Then you come to the last part where you agree to terms, confirm the details here, and make sure your KRA, first of all, your KRA PIN or whichever letter you are using to confirm your address, have the address the way they are shown here as the resident address. They are shown as they appear there. And in the same order. If they don't appear, you can edit. Your names appear as they are in your ID. Then, date of birth is as it is in your ID, especially the year. That is the most important. The rest, just leave them. You come and agree. The first one, essential legal agreement, then interactive, and click agree all. You have selected all of them. You come again and sign with the same name that is shown there at the bottom, Peter M. Chege, and submit. The next step is just uploading confirmation of address and proof of your details. Let's give it a minute. It is setting up. Sorry, we need more information because they can't verify my identity. So you click continue. This is where now it becomes tricky. There are various ways you can confirm your account, either by funding, which you don't want to do at this point, or you verify your identity. So for us, we start by verifying identity, then address. So you got to verify identity. So here you attach your ID. So national ID that shows that. You click continue and attach it. Mine won't have these details, so I'll just use a dummy document. Here you have two modes. You have streamlined verification, which is a bit tedious and tricky. Just go for manual, select manual. On the right side, click continue. It will allow you now to attach your ID. So here you only need to attach both back and front side. Here, let me just pick any document. I can use not a very huge document. Then you click, let me remove that. Let me just pick any. I can use a QR code. I'm looking for this. Then you can also attach, I'm just using dummy document. You can also attach backside. I'm just using dummy images. So you attach front and back of the ID and click upload the two. So you click, the document contains both back and front, because the ID have both back and front. Then you upload. The next thing is proof of your address. We are about to finish. So that document is done. So we wait for that verification to be done online, but you can submit it to be done manually. So you wait for this video to finish. It's a video. Hopefully it doesn't take time. let it load. Let me see if I can, I can't push this. But once these roads, at the top you can see there is a bar that is moving. Let's give it a minute. As it loads, let me see if there is any question. Source of income, tunafaa kuselect gapi? Just select the second or the third. For AIB, we are yet to integrate on the digital platform. It will take some time. IBKR hapo kwa funding verification, please elaborate. Don't fund right now. First verify the address and verify identity. Once the account is approved, that's when you fund. I wish I can log into my account. Let me see if it will complete. So it will tell you, sorry, document could not be verified. Click continue now to submit manually. So you click continue at the bottom, don't change anything. The ID is sent for verification. I know it might give verified, yet it doesn't contain my details. Then you come to proof of address. Notice it has to have your name and also these addresses specified on that document. I can come, select, then on this side, you come select, if you are using bank statement, you can use it. Utility bill, if you pay bills and they have these addresses, or you use any government issued document or a letter, as long as it can show your address. Here, let me just pick, can pick any documents here. It's only that I don't want to use other people's documents. Let me use that. Then you click upload. Again, it will go through the same verification. If it is not able to verify, it will tell you to submit manually. You are done. You only wait for email confirmation. So you wait for that video to complete. Again, you submit manually and you are done for the day. You just wait for the email confirmation the following day. Either they will tell you your ID is not verified, which you need to submit a clear ID, or is the address that you are putting in the document you have uploaded, that document doesn't contain those addresses, or the document date is outdated. You only need to look where there is a date, change to the current date. You can always do that with a PDF, Acrobat Reader, the full version. Or if it is an image, you can edit. So let's give it a minute, because now after that, you just wait. You get confirmation that the account have been opened. The next step is funding, which I will show you shortly. Funding, you only need to get the details of the bank. If you are doing the bank, I will handle the bank today. Then for Wise, we can do some other day, because it takes a process. You have to wait for Wise account to be verified. Then you can start transferring. But also check with your bank the cost of transfers of Swift transaction. There are those that charge high, and there are those which are cheap. But remember, in international markets, you can recover that money very easily if you buy good stocks. You only need to target Nvidia, buy some good stocks. Within one day, you have recovered your money and you continue. So for onboarding in terms of interactive broker, it is the simplest. In terms of funding, as long as you are doing the right thing in your bank account, it is the easiest. Trading, it is even simpler than AIB Digit Trader. Very simple. Let this go through, then I try to log into my account. So you wait for verification. If your document is verified online, then you are ready at that point. If it's not verified, you submit manually. They verify, they will send you an email. So you're just waiting for it to complete. Then after you get now your account details, you are ready to trade in dollars. And account opening doesn't take more than 1 day. Like now, if I submit right now, by midnight, I should have an email either declining or accepting. If not midnight, by tomorrow morning. If I send funds tomorrow, the following day, very early in the morning, I have the credit, I start trading. It is not real time for the bank. So we wait for it to finish. It is the easiest process, I think, in terms of account opening. It is fully digitized. And try to use a computer, not a mobile phone. Mobile app, it takes some time. Mobile app now you can use for trading after you get your account. So we wait for this to finish. So you click continue. If it is not verified, then you click continue to submit manually. And with that, I will just wait for tomorrow for email confirmation. So those two documents, if they are verified, it will tell me they are verified. If they are not verified, I will be rerouted back to this page. Come and change whatever needs to be changed. So with that, let me stop sharing. I log into my real account. So I log into the real account. I show you where you get the details to FAD. Let me put my security code. So when you're logging in, it will ask you for security code. That's why you need your mobile number there, and you have access to that phone. So 060, I'm just taking the code 542. Log in, then we share the account. Then please don't use my details when FADing, because the FADs will come to my account. Yeah, it is there. Let me share this. And that is the portal for IBKR when your account is approved. That you can see there. When you log in the next time, you should be able to see these. If you are trading, you just need to click on trade. You can be able, if let's say I want to buy NVIDIA, I just need to write NVIDIA here. Select the NVIDIA. That's why I say it is simple. I only need to change the quantity to 1. Maybe price. Just leave the others the way they are. I can even put the good till cancel. And then I click buy order and submit. Accept. It's that simple when you're buying shares. But my order is cancelled because I don't have credit. So let's go to the FADing. I'll briefly go through this. Portfolio is where you see your shares. Positions, your holdings, this is where you see what you have bought. Trade, you see the details of your trades. We'll come to all these when we start trading. They also have research, market screeners, where you can get the details of shares to buy. Now, in terms of FADing, you go to transfer and pay. You click transfer funds. Transfer and pay, transfer funds. We are depositing. We are not withdrawing, we are depo. You click on deposit funds. You click on new method. Here you have several ways. There is bank wire, which is dependent on your bank. Ignore direct ACH. You can link bank account. That does not work for us. It's for US. And there is a transfer from Wise balance. So you load your Wise account, then you can transfer from there. So if you click transfer, it will connect to Wise account and load. This will do another day. Then there is online payment. We come to wire transfer. You click on get instructions, the first one, get instructions, and it gives you the instructions on how to FAD. So the first thing is to put the bank you are sending money from as it is. Let's say I'm sending from KCB bank. Then my account number, you put the way it is because they need to see that in their bank statement. Then you can leave the nickname as it is. The amount that you are sending, let's say you are starting with $10. Then you click next. Now these are the details you need to FAD. For the bank details, you need to click on the exclamation on the bank virtual account number VAN. So you click on this to get the actual bank account number. It is there, it is here. This is the account number. So you use this account number plus the beneficiary name is the interactive broker, then their address, their SWIFT code, and their bank and the amount in your bank. Then the reference, payment reference requested in your bank, make sure you use the way it is here. You deposit the amount. Once you transfer, that is, you initiate in the bank online portal or your bank app. So I would go to KCB, feed in these details, submit. Bank debits my money that time, SWIFT transfer. I will come and click finish. At that point, now IBKR will receive my money from bank. They only need to confirm that the funds they have received matches the details that I sent. Notice I can't do transfer right now, but if I click here, I can come to KCB. See, I put the amount and everything. When you're submitting, remember to also include reference number. There's somewhere it asks for reference number. That's all you need to do. In IBKR, the following day, when you come to your account, you should be able to see your cash reflecting. So I'll do a full video on it. So you'll be able to see the account balance here from 0 to the amount that have come in. And from there, now you can start buying shares. Let's go back to Q&A, then we can close. So I hope I didn't go through marathon process, but happy to repeat in the next exclusive training for IBKR. So for IBKR, I'll do an exclusive training on its own. So let me pick a few questions. Source of income, you can select any figure. You are not limited. You can select any figure. But make sure you don't select the lowest on all entries. IBKR hapo kwa funding verification, please elaborate. That one don't select. You do it. If you are already approved, you just log in and fund the account. But there are two ways of verifying your account. Either through a deposit. You initiate a deposit first before you get the account, which is risky. So start with verifying ID and address, then you fund once the account is opened. For the purpose of proof of address, do we use the details on KRA PIN or details on ID? Use the ones on KRA PIN. The reason is KRA PIN, you can amend the date to the current. ID, you can't. So you download the KRA PIN, use the details on KRA PIN, also edit that PDF and change the date to the current, save, upload that. In terms of recording, yes, hopefully it has not stopped recording for this part, but I hope it is recording. Is there option for M-Pesa? M-Pesa is through Wise, so you open Wise, so you deposit from M-Pesa to Wise, then to IBKR. Between Scope and IBKR, you are buying directly from the market. IBKR are the ones who have given all the brokers you see in Kenya access to international market, apart from Scope Market. Scope Market, they go through D-Prime broker. I think it's part of their broker on UK. The only difference is who owns the shares. In IBKR, it is you who is buying from the market. In Scope Market, remember Scope Market Kenya connects through another broker. Nothing stops them from buying shares, then you trade in their books. But you may need to check. Maybe in the next one, I will come with a review. But those are the only two brokers I can recommend. Scope Market is if you want to trade with M-Pesa. There is a straight through process, even bank. For IBKR, it's tedious, but you own the shares. Must you transfer funds with your bank account? Yes. You can't use somebody else's account. It has to match the details you have given. Recommend global stocks to buy. 1, Nvidia. 2, KO. KO is Coca-Cola. Then there is Alphabet, which is Google. Then we have Meta. which owns Facebook, WhatsApp. Those are tech stocks which can never drop. Then you may also want to buy silver. Silver, yes, because of war. I know it is making money. Also, you may want to check S&P 500, that is SPY. There is also triple Q, those are ETFs. But in the next training, we'll go through them. So those are purely capital gains. In international markets, even if a stock gives you dividend, don't go for dividend. Don't buy for dividend because of withholding tax. Between M-Pesa and wire transfer, which has lower charges, I may need to check between Wise and IBKR what are charges, and from M-Pesa to IBKR. I think with that I've exhausted all the Q&As. I'll see if we can do international markets one day, either Saturday or Sunday, then NSE on an alternative day. So I already have an account with IBKR. My problem is that I cannot access all US stocks and ETFs since I'm currently in Europe. Is there a way I can access all US stocks since I'm a Kenyan? You may need to use VPN. Just try to use VPN and connect. You see if it will allow you. Maybe they have limited what you can access while you are in USA because of tax. So mostly is through, you can try to play around with VPN. But you can also drop an email or a chat to them. Maybe it is disabled based on your account. How long for IBKR becomes dormant? This one I may need to check because my account is 1 month old. It has not gone dormant. I have not yet funded. But if it is dormant, you can always deactivate. So you don't need to worry about it. And with that, I think we have done our 5 good hours. Is it 5 or 4? 4 good hours. I don't want to extend a lot. What do you advise for a Kenyan who is living abroad? Do you use details for where they reside or home details? Use the details of where you reside. It's much easier. They can always track your traffic. They can see you are from US. So it's easier if you use the details from that side to avoid suspension. I think on the screen, that's my number, 0723384775 in case you want to reach. In case you want any help, 0723384775. And thank you so much. I appreciate your time. And all these trainings still remains free. So even the next one, you are free to come. I'll just download the recording, upload on YouTube, share on the channels where you saw the announcement. For those who may have shared the recording, you can share the link to the training. Please share the recording. Maybe you can, Patricia, you can put the question on the chat. So I think we are ready now for NSE and global markets. It's now starting to buy shares. So the next one is pure practicals. GTD, we hit Safaricom. You see me buying. We go to IBKR. I buy stocks. That way, I think it will help you maximize on NSE. And please don't panic when market go down. It always recorrects. Don't ever sell because the market is down. Thank you so much. Let's meet in the next one. Bye-bye. And have a wonderful weekend. Let's meet next time. Thank you.